Good morning, everybody. Welcome back to another episode of the Market Open. Thank you all for being here. It is Friday, February 27th. We are live. Last day of February. Actually, no, tomorrow's the last day of February, but it's last trading day of February. And what a February it has been from a variety of perspectives. We have seen lots of things happen in this market. We are officially done with big tech earnings. That is now complete. We do have Oracle, Broadcom, a bunch of other companies over the next couple of weeks, but we did get Nvidia out of the way. Markets are red in the pre-market. We got a bunch of different headlines that are, not necessarily, I would say, the cause of the red, but definitely a potential prerequisite for why you would think people would sell off equities. Nvidia down another 2% right here, 180, 190 in the pre-market, fell 5% yesterday. Obviously, those earnings are not being recognized by the street, being discounted. You got some stuff about Iran that came out this morning, so maybe that's causing the pain. Rocket Lab had earnings yesterday. That's down 5%. Netflix, we'll talk about it. That's up 9%. It looks like they are walking away from this Paramount deal, and that's why the street is excited about it. Duolingo, down 26%. CoreWeave, down 12%. Google's down 1%. Microsoft's down 2%. Adobe's down 2%. Palantir, which was up 2% yesterday because they got an upgrade to $180 from UBS. We'll talk about that upgrade. That's down 2%. Salesforce down 4%. Amazon down 1%. SoFi down 4%. I mean, it's another Friday in February, which I think has been relatively constant in terms of the red. Yes, we do have PPI data. Let's get started with that because I know that's important as well. However, the PPI data, it's a bit delayed, so I didn't know if the street would care as much as they do. But, you know, I guess they do care. Also, OpenAI just raised a lot of money, and, like, it's official. It's not a rumor anymore, so we'll talk about that. But PPI came in at 2.9% versus 2.6% expected. Again, these numbers are delayed. These are January numbers, so these numbers were supposed to be out a while ago, but we had some issues technically, so they ended up coming out today. I mean, look, that's not good for it to come out at 2.9 versus 2.6. Granted, it's been a while since January, and these dynamics probably have changed. However, PCE, which I think we got last week, also wasn't that good. It was a little bit hotter than expected. CPI was the only number that actually came in a little bit below expectations, but PCE and PPI is something more that the market looks at. And then monthly, we did have a little bit of a reacceleration as well on PPI. Price of services increased 0.8%, the most since July, led by a 14% pump in margins for professional and communications equipment wholesaling. So, yeah, although in December, PPI had a downward revision around, again, producer price index is what producers pay for products, which ends up affecting what consumers pay. One could argue that February CPI and PPI also could accelerate if the January PPI was hotter than expected. So, I mean, you definitely, when this number came out, which was about 20 minutes ago at 8:30, red candles started popping up. However, I was up pretty early today. We were red early in the morning before PPI. So I feel like this is just an accelerant on some of the ugliness that we're seeing. And quite frankly, I think given the level of options that are expiring today, and also given the fact that, we'll talk about it later throughout the day, but the Iran tensions are really heating up. And they're heating up to the point where I think a lot of people, especially fund managers, might just be saying, you know what, I'm not going to be in stocks over the weekend. I'm just going to sell. Let's see what happens next week before taking the risk. And then when you have an ugly PPI, that accelerates the downside. And I think that's what we're seeing right now in the pre-market. Nvidia right there down about 1.4%. S&P 500, that is also, down almost 1%. Hit 682. Now we're at 684, but we are down 0.77 in the pre-market right here. All right, so let's get into it. We got a lot to talk about. Thank you all for being here. Good morning, good morning. Again, bunch of different headlines. We'll talk about the earnings from last week, and we made it to the end of the month, folks. We made it to the end of the month. Maybe March is different. Maybe March is different, but February is supposed to suck. January is actually supposed to be good. January was good. February is supposed to suck. We ended up having a crappy February. Some sectors okay, but I mean, a lot of sectors, including SaaS, fintech, high beta, AI, just a crappy month. And maybe getting through February will potentially change that. So let's get into it and let's see what we've got to do. I think let's get started off with the first headline that just broke literally 3 minutes before I went live. Let me pull this up real quick. Obviously, the block headline from yesterday is super important in regards to the layoffs, and that stock is up a lot in the pre-market. We will also talk about Netflix as well. But here's the news that broke 5 minutes ago. We've got OpenAI officially raising $110 billion at a $730 billion valuation. $110 billion at a $730 billion valuation. Let's talk about some of the headlines that we have right here. So if SoftBank or when SoftBank officially closes this deal with OpenAI, which looks like it's closing today. I didn't know that Friday morning we would wake up and the deal would be closed, but it looks like it is closed. SoftBank will own 13% of OpenAI. Next headline, investors in this deal. Nvidia's doing 30, SoftBank's doing 30, Amazon's doing 50. Wow. So those rumors about Amazon putting in 50, they were right. Amazon is putting in $50 billion here. SoftBank 30, Nvidia is also doing 30. Some other headlines we're seeing on this. OpenAI is expanding their pact to purchase AWS compute by $100 billion over 8 years. Well, now you know why Amazon's putting in 50. Here's the press release from OpenAI. Let me pull this up as well. This is now official. $110 billion at $730 billion valuation. Today, we're announcing $110 billion at $730 billion pre-money. This includes 30 from SoftBank, 30 from Nvidia, 50 from Amazon. We've also signed a strategic partnership with Amazon and secured next-generation inference compute with Nvidia. Additional financial investors are expected to join as the round progresses. More than 9 million paying businesses rely on ChatGPT for work. ChatGPT is where people start with AI with more than 900 million weekly active users, and we have now more than 50 million consumer subscribers. 50 million people, folks, are paying for ChatGPT. The valuation from this new round increases the value of OpenAI's foundation stake in the OpenAI group. This is like the nonprofit thing, to over 180 billion, further strengthening what was already one of the most well-resourced nonprofits in history. OpenAI and Amazon today announced a multi-year strategic partnership. We signed another partnership with Nvidia, including the use of 3 gigawatts of dedicated inference capacity and 2 gigawatts of training on Vera Rubin. This builds on Hopper and Blackwell systems. And then Sam Altman, quote, "We're pushing the frontier across infrastructure, research, and products to make AI more capable, reliable, and broadly useful. SoftBank, Nvidia, and Amazon are long-term partners who share our ambition." Wow. All right. So it's happening. This is actually really bullish, whether you own any exposure to OpenAI or not. And quite frankly, if you own anything in AI, you kind of do own exposure. Because the biggest concern around OpenAI was, will they get the money to be able to pay AMD, Broadcom, Oracle, Nvidia, all these companies that they have purchase commitments to? I mean, Oracle really needed this to happen. Oracle right there down to 3% of the pre-market. And it looks like they just got a fresh round of $110 billion by the best companies on the planet that are putting in money. So they are roping in the success of Amazon and Nvidia and all these companies into it. And it makes sense. You know, Amazon thinks, hey, if we give these guys money, they're going to use a lot of our services. And if they use our services to continue making more revenue, that's where it doesn't get as circular as people think. But also that locks in a lot of revenue and commitments for these tech companies in the world of AI, as OpenAI is one of the leading foundation model companies. That's probably going to be one of the only handful of companies that can pay for these level of services. S&P 500 right there, still down in the pre-market. Interesting, they announced it today, but that announcement coinciding with some crappy PPI data, not really helping the equity markets right here. Amazon CEO says, as growth rates are high, we will spend more capital. This is exactly what Jensen said on the call, that if these companies are making more money, they will continue to spend more money. And then you have a further renewed partnership with Microsoft and OpenAI. Looking at a press release right here with Microsoft, as Microsoft says, we will continue to allow OpenAI to be running their workloads on Azure, and we look forward to continuing the partnership with them. All right, there you go. OpenAI, $750 billion valuation. It's happening, and there it is. It is now final. Let's do a quick little update on PPI. Again, if you're just joining, it was hotter than expected, and then we will get into all the other headlines we have.
Breaking news of the morning, our January read on wholesale inflation, PPI, producer price index, coming in up 0.5%. That's hotter than expected by a couple of tenths, equals where we were last month at up 0.5, and the up 0.5 last month was the hottest since September when we were up 0.7. If you strip out food,
so again, PPI was a miss, 2.9 versus 2.6, and that's why I think the markets also felt some of the pain. Here is Sam Altman live right now about the new fundraise.
Government, the Pentagon needs AI models. They need AI partners. This is like clear, and I think Anthropic and others have said they understand that as well. I don't personally think the Pentagon should be threatening DPA against these companies, but I also think that companies that choose to work with the Pentagon, as long as it is going to comply with legal protections and the few red lines that the field that we have, I think we share with Anthropic, and that other companies also independently agree with. I think it is important to do that. I've been, for all the differences I have with Anthropic, I mostly trust them as a company, and I think they really do care about safety, and I've been happy that they've been supporting our warfighters. I'm not sure where this is going to go.
In terms of OpenAI and where you go, $730 billion is a huge valuation, and $110 billion provides you what runway in terms of when you think about the timing of what that capital gives you, and then to the extent that you may think you need more capital in the future?
I don't know the exact date, but it's a very long runway. I expect we will need more capital. I don't know what the form will be. It may not, there's like a lot of ways we could continue to finance growth. But this is like a long runway from now.
Related to that, and maybe Andy can speak to this, the other big story of the morning, which relates very much to AI, and I think we're all trying to understand it. Andy, you and I have talked about jobs for a long time in AI. Jack Dorsey just announced a plan that effectively cuts 40% of his staff because he believes that AI is going to allow him to be just as productive, if not more so. And
by the way, on the Anthropic conversation, so once again, Dario, the CEO of Anthropic, came out yesterday and says, we will not negotiate with the Department of War. We do not want them to use our models, or we only will allow them to use our models if they promise us they won't be engaging in mass surveillance, yada, yada. So the Department of War started, based on Axios reporting, talking to OpenAI and Google yesterday. 200 employees from OpenAI and Google signed a petition stating that they do not want their models also to be used in the same way that Pete Hegseth is threatening to use the Anthropic model. So I'm not sure which company ends up taking up this contract, because either they're going to use the Defense Production Act and force them to give their services, or you're going to have these employees at these companies reject the use of their models being in these circumstances. Maybe XAI comes in, but right now the Pentagon is not sure who's actually going to supply their AI to the government.
I wonder what your reaction is to that, and what you think it portends for the rest of us, if you will.
Well, I haven't really digested that news very much, and I think every company is going to make their own decisions on these things. And my view of it is what we've talked about in the past, Andrew, which is just, I think that this is the most transformational technology shift that we've seen in our lifetime. I think it's going to impact the way we all do our work. And I do believe that a lot of the jobs that we've thrown human beings at the last 20 or 30 years, you won't need as many human beings doing those same jobs. But I also think there are going to be other jobs created. And that has always happened in every technology shift. And, 15 years ago, there was no such thing as a cloud solutions architect. And today there are tens of thousands, maybe 100,000 plus of these types of jobs. So we will have lots of new jobs, and and there'll be some sort of transition, and we'll all work through it together.
Sam, before we let you go, one of the things that people have always talked about is AGI. You and I have talked about AGI for a long time. One of the deals that or terms you had in one of your earlier deals with Microsoft had to do with, what happens once you get to AGI. So I was going to ask you whether any of those terms exist either in this fundraising round, and sort of how far you think we are to that now.
I can't tell you the exact date that AGI arrives. And also, it's gotten to the point where people define it in different ways. The field is clearly making rapid progress. So I don't want to give a timeline, but if you look at what the current models are capable of, you hear people say, man, it feels like something I didn't expect to see this fast, or I didn't expect to see this in my lifetime. I expect continued steep progress from here. I think we are all going to be surprised about the amount of AI progress the field sees this year, probably every year after that. So I don't have a timeline to give you, but it does feel like we are making maybe faster progress than even I expected.
Does that change any of the deals, though? Are there these AGI term limits, if you will, in any of these transactions you're doing?
The Microsoft one has one, as you mentioned.
But going
even
forward
post
now.
AGI, we'll have like a very strong, long relationship with Microsoft. We're not, given that we think it's like a nearer term thing now, we're not doing new deals that like, stop when AGI gets reached.
Fair enough. Sam and Andy, congratulations on the deal. It is a big one, a big tectonic shift in the AI business, and we appreciate you joining us first after the deal was
We are
just announced.
delighted to
Thank
get to
you.
work together. Thank you.
Great to see you both.
Looking forward to it. Thanks for having me.
You bet. Thanks.
Wow. OpenAI, folks. This is for those that lived through what was happening during .com. I mean, I don't know if it got this crazy. And the cool thing about this is that it might not be unjustified like .com, but there weren't private companies raising at a 730 billion valuation and getting 30 to 50 billion from the biggest public companies on the planet. It's incredible. It is incredible. This is not bearish, in my opinion. In fact, this just means OpenAI, Anthropic, et cetera, they're going to buy a lot more compute from the AI stack. Obviously, Nvidia is going to be a big part of that. And look, Sam Altman's got the money now. As long as they can keep growing, whether you like him, you hate him, you think he's a scam, it's all going to fall apart. And maybe it does. And quite frankly, maybe Anthropic and Google end up winning and OpenAI goes to shit. But at least in the short term, they've got the money, and if they can use that money effectively, maybe it works out. I know a lot of people don't trust Sam. There's a lot of reasons to be doubtful of Sam, but at the end of the day, if they can use the money, maybe they can continue to grow. And look, their competitors are growing as well, so they kind of need the money to even have a chance to be able to grow. Take a look at what happened last night. Anthropic milestones were released. Daily signups have tripled since November. Paid subscribers have more than doubled since October. Free users grew 60% in the last month. I mean, again, all of this is only going faster and faster, and it's going to need a lot more compute, which is why these companies are raising a lot of money. Having said that, let's get into the conversation that Sam and Jassy kind of touched on, which is what happened with Block yesterday. So Square's stock price, XYZ ticker symbol, is up 20% in the pre-markets. I wonder if that actually holds, given we are red right now. Either the market bounces and this goes higher, or, yeah, it's already fading a little bit, 16% now. They cut off 4,000 people. 4,000 people, 40% of the workforce is gone. I don't know why SoFi is down 5%. This stock goes down 5% randomly every other. Like, why is it down 4%? I don't know. Is Hood down 4% as well? Yeah, Hood's basically down 4%. It's fintech and SaaS Armageddon, which is why Block being up 16% to me is very impressive, because fintech has not been in favor this whole month. But they're up 16%. So there's two thoughts on this. Number one, I don't know why Square had 10,000 employees in the first place. It's a $33 billion company. Robinhood's a $70 billion company. Coinbase is an $80 billion company, or I think it's $55 billion company, and they have way less employees. So I don't understand why Square needed 10,000. Jack Dorsey did come out and says that after the COVID pandemic, we had a overboom that was a bit too aggressive, and we started hiring too much. But he also explicitly said in his letter last night that AI is part of the reason why we are laying off some people. We just don't need as many people as we thought we did. And the markets are loving that right now, because their argument is, hey, you're going to save a lot on costs. You're going to get a lot more disciplined. And, there's more productivity and efficiency coming down the pipeline that's going to be distributed to the shares that are outstanding. They're not going to be distributed to the salaries of people that are theoretically getting that productivity or gain, if it's coming from something that, costs $1,000 a month instead of $250,000 a year with health benefits. And that right there, I think, is very exciting to the market. So there's a couple takeaways from this. Number one, it kind of is ironic that this came out the week of the Citrini article. The Citrini article said people will get laid off, and that's the new world that we're living in. And I have a more optimistic view about what's going to happen with the labor market. I'm sure other people have that perspective as well. The 10-year is going below 4, which is at least good to see in the midst of the sell-off, 3.983. But it is ironic because, Square's getting rewarded by the stock market for firing people. And I think you're going to have a lot of other companies look at this reaction and say, wait a second, if we could just replace even 10% of our workforce with AI, which a lot of companies would probably want to do anyway, just given they might not have that many people that are as efficient as they need, and their stock gets rewarded for that. That is a scenario that could trigger a little bit more of an effect throughout the entire market. Also, from a macro perspective, rate cuts, the Fed is definitely looking at this stuff. We're only at 3.9% probability because PPI was worse than expected this morning for January. That's why it's unlikely we're going to get a rate cut. But if we continue to have these announcements and we continue to get more and more people getting fired, or more and more companies thinking of having these mass layoff announcements, then yeah, I think the Fed would start taking that a bit more seriously and say, hey, maybe we were wrong. Maybe AI is going to be a deflationary effect when it comes to the labor market. And that's something that we have to take seriously. In general, I don't think this is the best example to say AI is taking jobs, because yes, Jack did say that AI is going to be more efficient and we don't need as many people, but there's no reason Block should have had 10,000 people. The company was mismanaged for years. When Jack was the CEO of Twitter, it was mismanaged for a decade. Say whatever you want about Elon, but he bought the company and started actually changing and putting out new products. They only have 1,000 employees versus 8,000 that Twitter had in the past. So I do think the company was mismanaged, but if AI ends up becoming more of an accelerant, we might see more of these announcements. And so that's what we got on Square. Let me know in the chat if anyone's long this company, but there you go. 16% move. I kind of think it fades out. If all of fintech is getting hit, I don't know if Block is able to hold up just because of the layoff announcement, but it is getting rewarded for that right now. Flutter down 11%. Let's go through some of the earnings of yesterday. Kind of a nasty day for earnings. Figure, that was down 8%. InnoData down 8%. Dell actually beat their expectations by $17 billion. Makes sense given Nvidia beat their expectations so much, and Nvidia is probably going to pay a lot of money for the servers for these GPUs. Dell right there does deserve to be up 11%. CoreWeave had a great quarter. The problem is their expenses on OpEx are going faster than their revenue. Revenue is growing at 110%. OpEx is growing at 160%. And they talked about supply chain issues once again in Q4 that created an issue for them to get the type of revenue that investors expected, although they did beat on revenue expectations. They missed on EPS expectations by 30 cents. And I think that's why the stock is down 12%. Same issues they had, or similar to the issues they had back in Q3. Also, they have a revenue backlog of $70 billion. So they have a ton of demand, which is the bull case on CoreWeave. It's just the internal economics of the debt to equity ratio and the OpEx growth versus revenue growth, I think, is what's causing some of the pain. That's why that's down 12%. Autodesk is up 1%. Rocket's up 4%. They had good earnings. Rocket Lab, I thought, had a good earnings. It's just, again, stock trades at a premium multiple. That stock is down 6%. MP is down 2%. Block again up 15%. And then SoundHound, good earnings as well. That stock is flat, up about 1%. So that's what we had with earnings yesterday. Wall Street Journal says no deal has been signed between OpenAI and the DoD. That makes sense. Again, there were a lot of reports yesterday that OpenAI employees and Google employees, but people that work on Gemini in particular, wrote a letter to the company. Yeah, look at this. Here's the letter right here. Google had 172 people that signed. OpenAI had 47 people that signed, and all of them came together and said, we hope our leaders will put aside their differences and stand together to continue to refuse the Department of War's current demands for permission to use our models for domestic mass surveillance and autonomously killing people without human oversight. Now, from the Department of War's perspective, their argument was, look, we're not going to engage in massive mass surveillance. We're not going to do all this crazy stuff you think that you're accusing us of doing, but we don't want to have to explain every little detail of what we're using the technology for. And we don't have to call you up on a random Wednesday if we need to do something, be like, hey, do you give us permission to do that? So Dario from Anthropic's I don't care what your perspective is on this. If you cannot guarantee that our AI will not be involved in mass surveillance, then you do not have permission. And Pete Hegg said, they were kind of going back and forth on Twitter. He was like, we're not going to guarantee shit. You're either going to give us the product or not. And I don't know what that's going to lead to, but it looks like OpenAI and Google employees also don't want this. I don't know if Google wants this contract from a perception perspective. I don't think OpenAI wants it from a perception perspective. XAI maybe is the one who's going to end up taking it. But you might have a lot of the model companies just say, from a branding perspective, it's not the best to be doing this. So I guess we'll find out how this plays out, but that is also another headline in the AI ecosystem. Okay, Duolingo and Netflix. Let's talk about both. First of all, let's discuss Netflix. First, congrats if you're in Netflix. Stock's up 9% right here. What happened with Netflix last night? For those that didn't know, the Paramount offer officially was deemed as superior to the Netflix offer, and $31 a share has now been committed as the offer. Paramount came out. They said, we think this is superior. Netflix came out and said, you know what? We also think it's superior. We're out of the deal. $57 billion of debt has been committed for this deal. Larry Ellison is going to use his $200 billion net worth to pledge the other, I think it's around $49 billion of debt in order to make this happen. And you got the Ellison Trust and you got Bank of America, Citigroup, Morgan Stanley that are coming together to supply this $57 billion of debt in order to make this happen. Remember, Paramount is only an $11 billion company. They're buying something that's worth $90 billion. They don't have the money. But Larry Ellison has the money. The debt markets have the money. And so they are leveraging up. As a result, Netflix said, you know what? This deal is financially not interesting to us anymore, and we're out. And we're taking the $3 billion breakup fee. I think this is so smart for Netflix. For 3 weeks, they went back and forth in negotiations. They come out with $3 billion, 30% of their net income for doing literally nothing. This is a company, by the way, that's not struggling to grow, but definitely struggling to have those massive growth rates because, again, it's a mature company. They already have so much of the world using their product. So to get a free $3 billion to do nothing, I think is very strategic. Number two, you have Democrat lawmakers already coming out that don't like that Larry Ellison is getting all of this control in regards to TikTok and CBS. And now you have, Warner Brothers, which is just an iconic legacy media company. And they're saying, hey, this deal has to go through some scrutiny before it officially gets approved. And so now it's Paramount's problem to deal with all the antitrust and collaboration that they have to engage with to get this approved. And then finally, if the deal doesn't have a lot of synergies, this is very similar to Time Warner and AT&T, which ended up not really working out. And one could argue that Netflix is getting away with highway robbery. They're going to double down on their content, even though they're missing out on Game of Thrones and CNN and Harry Potter and all this stuff. Maybe that content's not that valuable in 10 years. Maybe AI content's going to be more valuable. And Netflix just focuses to invest in live sports and AI and all these other different things. And, the stock maybe gets a recovery easily back to that $100 range. So I think it makes sense. I think if you're in Netflix, you got to be happy about this. If you bought Netflix for this reason, then boom, this is what you got. And you should be pretty excited that this is playing out. Bernstein, once again, reiterated their outperform at a $115 price target. And their argument is simple. Netflix wins. We anticipate Netflix shares to recover to an above market multiple. The deal overhang disappears, at least for now, and management can refocus on what drives their business. The formula has worked, and we believe it will continue to work. And that's why Netflix is getting some more momentum. Let's do the green or red poll in the chat. Put only red as the choice. Yeah, it is kind of annoying that we got an ugly little red pre-market here. But it is Friday. And I don't know. It's the last trading day of February. So I guess we got to experience the red one more time before it's out. And again, the reason I'm saying this is because February historically sucks. March tends to be a lot better. But as we get into March next month, we will see how this ends up playing out. Duolingo is a down. So, look, I think this is the most expected 30% drop of the entire earnings season. I feel like a lot of people knew this one was just not going to be in the best situation. The biggest issue with Duolingo that I'm seeing is that monthly active users declined. And, I guess this, along with the guide, they went from 135 million to 133 million MAUs. So that's the second time MAUs decline, which is, something the street's not happy about. And then two, their guidance was just god awful. I mean, they missed by a lot. They didn't have an EOSE type of miss on guidance, but they definitely missed on adjusted EBITDA, revenue, and EPS forecasts. And I think the market's not as mad about the miss on guidance and revenue. It's more so about why they're missing, and the why could be Gemini, OpenAI, Anthropic are potentially teaching people how to speak different languages. Now, Duolingo is not just a language learning app. It's chess and music and all this stuff, but the TAM on that, I think, is just being questioned by the street. And again, I think there's a moat to Duolingo in regards to the network effect they have, just like Spotify, right? People say Spotify doesn't have a moat because you have Apple Music, YouTube Music, but Spotify is a big company. It was $70 in 2022. It's now $500 because they have a lock-in effect. They keep people on their platform, and they've slowly increased gross margins. They've negotiated with the record labels to give them the ability to show adjusted free cash flow continuing to go higher. I think that same story will play out with Duolingo. The problem is music as a broader TAM, right? Billions and billions of people listen to music, and they're quite willing to pay $10, $20 a month for that music, especially if you have the right algos and you get the right playlists and you kind of lock them into an ecosystem. Yeah, you're going to have a really juicy subscription business, and the margins eventually will increase. Duolingo's TAM is people learning stuff, which, yeah, is a big TAM, but they don't have a lot of paid subscribers compared to their free users. And, you know, if people want to learn chess, they can just ask ChatGPT to help them with learning chess. They might not have to go through Duolingo's structured ecosystem, which is probably going to be a better way to learn chess or music or Spanish versus ChatGPT. But the market's not perceiving it as that better. And the numbers that Duolingo are putting up are not really showing that it's that much better. So look, does it make sense to go dumpster diving here? Has the sell-off been overly exaggerated? Maybe the stock's going to open under a $4 billion market cap. However, sometimes these names are just cheap for a reason. And I feel like you want to give this one at least a couple weeks before. Like, I don't think there should be a rush to get excited to dumpster dive on this, as it could rebound 27% in a day, because it just doesn't seem like the narrative and the numbers are conducive for Duolingo. So, yeah, I mean, it's just another name in the world of AI and the market. I mean, if the SaaS names can barely catch a bid because they think Anthropic's chatbot's going to kill ServiceNow, Microsoft right here down another 2.7% in the pre-market, then it's going to be really tough for a company like Duolingo to be able to get that momentum. So to me, not the most excited on this one right here. Did CoreWeave drag down the data centers? Yeah, pretty much. Oracle right there down 3.6. Nebius. So I did sell some Nebius yesterday to buy more Nvidia. For those that missed it, I bought more Nvidia yesterday. I felt pretty comfortable buying more Nvidia. I know the stock's down 2% right here. The market's going to be the market, but I did sell about 60% of my Nebius position to buy more Nvidia. And quite frankly, I think Nebius is going to be great. But the only reason I got into Nebius was to have a further extension of a proxy to data centers. If you're going to give me Nvidia trading at 15 times next year's earnings, be my guest. I will buy that dip any day of the week. And, you know, to me, it's just an extension of the data center thesis that I have. So, yeah, bought more Nvidia, but Nebius is down 5% right here because of CoreWeave. Iren's probably down as well. Iren also down about 4% right here. Are you buying more AMD here? No, I'm buying more Nvidia. And the reason is Nvidia just said they're going to grow 80%. And the stock is down 8% from earnings. Like, to me, AMD had a good earnings, but they're not growing 80%. And if that's the slowest that Nvidia is going to grow this year, or even if it's, you know, consistently, they're going to grow 70 to 80% for the next 4 quarters. Like, I really don't see why the market is scared about Nvidia here. We already went through the reasons yesterday. I can hypothesize about those reasons. We can talk about the options market potentially creating some shenanigans. But at the end of the day, this feels like, quite frankly, the easiest Mag 7. It is now the cheapest Mag 7 on a forward PE basis. Now, if you don't believe in the E, you can't believe in the P. But I really do believe in the E, and I think they will continue to scale. The story is relatively simple to understand, and if it plays out, then I think Nvidia is going to be higher from here. So we'll see how the market treats it today. It looks like it wants to go under 180, and looks like a lot of stocks are kind of struggling in this current ecosystem. Palo Alto's down 2%, CrowdStrike's down 3%, Nubank down 1%, Novo down another 0.5%, and Roblox down 3% as well. Now let's talk about what's going on with Iran. I think this is actually the reason more so than PPI for why the market is maybe pricing in a little bit more of some pain. So the U.S. Embassy in Jerusalem said, in response to security incidents and without advance notice, the U.S. Embassy may further restrict or prohibit U.S. government employees and their family members from traveling to certain areas of Israel, the Old City of Jerusalem, and the West Bank. Persons may wish to consider leaving Israel while commercial flights are available. That came out in the morning. You got the U.S. Embassy in Jerusalem saying, hey, you might want to consider leaving because we're not saying shit's about to hit the fan, but there might be some indications that shit's about to hit the fan. And I think that is what's causing that. I mean, as soon as this came out, this tweet actually to me was more consequential for the pre-markets going red versus the PPI print, which again came in at 2.9 versus 2.6. Because now the market's like, okay, like, are we seriously about to do this? Is it actually about to happen? And if it is, you know, the immediate reaction is going to be a sell-off. And that might be a little bit of an issue. Wall Street Journal, OpenAI's Sam Altman tells staff co-working on a deal that might help solve the impasse between Anthropic and the Pentagon. Wow. You know, when Sam Altman has to be the broker, when Sam Altman has to be the broker of a deal between the Pentagon and Anthropic, that tensions are high. I wonder if Sam Altman could actually resolve it. I mean, the only way Dario's going to give up is if the Pentagon concedes they will never use their stuff for mass surveillance, which, you know, Pete Hegseth already said we're not going to do that, but he doesn't want to have like this. It's almost like an ego thing now. He doesn't want to have this conditional statement on using their software and like calling up Dario every time they try to do something. And I think that's the broader concern right here. Why not add to Microsoft? Nvidia is now cheaper than Microsoft. Nvidia, I have a small Microsoft position. I bought it at around 410 back in like mid-February, but Nvidia is now cheaper than Microsoft. I mean, it's becoming a bit of a joke to me. And, you know, at the end of the day, I don't know. I don't think these growth rates on this level of a size of a company should be doubted as much as the street's doubting it. And I think we look back at the end of next year and this is in a much better situation. So I think it's a buy right here, but obviously if the market goes down, Nvidia's going to go down and with it. And right now the S&P 500 is taking a hit. S&P 687 in the pre-market. Gold and silver are getting a pump. Wow, silver 6%, gold 1%. Yeah, if this doesn't scream geopolitical volatility, then I don't know what does. I mean, again, the market seems to be, I think it's that simple. I think the market, I mean, the 10 years going down, people are buying bonds. Like, people are buying gold, silver, and bonds. Market's obviously preparing for some potential pain over the weekend. Or potentially over the weekend. VIX is at 21 pre-market. Yep. You're seeing that as well. Is CoreWeave a buy here? The problem with CoreWeave, once again, is do you want to be stuck with all the debt they have and all the supply chain issues they have? That's another reason I think NVIDIA is interesting. I mean, like, NVIDIA doesn't have the supply chain issues. NVIDIA doesn't have the debt. NVIDIA gets all the growth. NVIDIA is the only reason that, like, the only reason to invest in CoreWeave is because of NVIDIA. The only reason to invest in Nebius is because of NVIDIA. Like, I think people forget, they think the neoclouds have a smaller market cap, therefore they're excited to invest in them. It's like, that's fair because, you know, you want alpha, you want growth. It's hard for NVIDIA to double. It's easier for Nebius to double. But let's not get it twisted. They only have a business because of NVIDIA. If NVIDIA is not putting up these growth rates, you think Nebius and Iren and CoreWeave can put up these? Oracle? No. So it all goes back to NVIDIA. And the company that's created the catalyst for all these derivative plays to get any momentum is being sold off and trading at 15 times earnings. That to me is why it's a bit more exciting. Regardless, if the market's going to fall off, then everything's going to fall off. And until we kind of get back into this risk-on attitude, we're not going to see if this changes. Robinhood down 4%. Robinhood was pushing 80 yesterday. Now it's back at 76. Yeah, it also goes back to TSM. That's fair. TSM getting sold off right here, down 1.6%. Bitcoin, unfortunately, also getting hit. It was at 69 yesterday. Now we're at 66. So once again, risk-on sentiment has gone back to risk-off. And unfortunately, if that doesn't change, then we're probably looking at a bit of an ugly day. I mean, put in the chat if you think this is a head fake right here. I want to say it's a head fake. Doesn't really feel like a head fake. Feels more so like going to take a hit. But we will find out soon. Here's a little bit more of an update on that Anthropic story as well from yesterday.
Back and forth we've seen between the Pentagon and AI giant Anthropic this week. In a statement, Anthropic CEO Dario Amodei says there has been, quote, virtually no progress on negotiations with the Pentagon. It does come ahead of a Friday 5:01 p.m. Eastern deadline for Anthropic to let the Pentagon essentially use its AI model Claude as it sees fit for confidential or use cases or face consequences. That could include being labeled a supply chain risk from what we've been told. The statement Amodei gave just now, we are getting this in. He says here the contract language we received overnight from the Department of War made virtually no progress on preventing Claude's use for mass surveillance of Americans or in fully autonomous weapons. New language, he says, framed as compromise, was paired with the legalese that would allow those safeguards to be disregarded rather at will. Despite DOW's recent public statements, these narrow safeguards, as he calls them, have been the crux of our negotiations.
So it looks like that battle between the U.S. Department of War and the AI models will continue. And it looks like it's not necessarily slowing down. And I really do wonder how they're going to broker a deal that kind of allows both sides to be happy about this. Macro update, 16 billion into ETFs were piled in yesterday, 73 billion for the week. So if it feels like we're in a bit of a bear market because, certain growth stocks are not doing that well, the S&P is not doing that well, just remember, it's not a bear market everywhere, especially across the entire world, especially in gold and silver. And once again, people are piling in. $73 billion, and this is with excluding today, Friday, $73 billion year to date, $348 billion in the first 2 months of the year have piled into these ETFs. So more and more money is getting into the ecosystem, even if that money is not necessarily being allocated to the biggest companies in the world. Also, we had money market fund updates yesterday. Negligible, increased by about 5 billion. So we now have 7.8 trillion on the sidelines, nothing too crazy. But 5.71 billion was an increase. Trump Media, which last year announced a $6 billion merger, said it's in talks to spin off its Truth Social unit into a separate company. Okay, so you will now be able to invest in Truth Social separately. This is from Bloomberg. So DJT right now is the way to get exposure to Truth Social. That's the public stock for it. That stock is down 20% this year. I guess be able to buy Truth Social by itself. And maybe that's what's happening. Any update on the Clarity Act? No. I think in the next coming months, by around April, we should have more details around the Clarity Act. But obviously, we saw that interview last week with Brian Armstrong, and they are trying to work out a deal that negotiates something to make the banks happy and the crypto companies happy as well. South Korea. So remember yesterday when we were talking about the level of risk that South Korean investors have been taking, and the irony is they could have bought their own index and beat up 40% this year, but a lot of them are in Tesla, Palantir, Nvidia, IONQ, all these high beta names. Well, this article by Bloomberg I thought was incredibly interesting today. The retail investor in South Korea has such an appetite for leveraged ETFs that the South Korean version of the SEC is basically now forcing retail investors to go through a course to be able to buy this stuff. On December 15th, local investors will have to complete an hour-long mandatory online training before investing in levered or inverse exchange traded products in foreign markets. Those seeking to buy derivatives products abroad will have to go through a mock trading program lasting at least 3 hours in addition to the online course. And the reason for this is because in December of last year, Korean retail investors put $7 billion into levered ETFs in 1 month and $40 billion throughout all of 2025. So the reason I bring this up is because what is the biggest market outside of the US that has done incredibly well this year? It is once again South Korea. And as you can see right there, that is up 47% year to date. Now, the problem with this here is not only that it's had a lot of momentum, but the question is it becoming a bit too greedy? Bank of America says this is something you sell off right here. SK Hynix is up 5x in the past 10 months. Kospi, which is the South Korean index, is overbought as gold, Bitcoin, and Mag 7 are showing better rate of returns based on, or not better rate of returns, but better peaks when you look at the 200-day moving average compared to the South Korean index. Now, is it actually a sell? I have no idea, because obviously if Samsung and SK Hynix keep moving, that's 50% of the South Korean index. But the leverage in South Korea, the level of excitement and momentum from the South Korean market compared to all these other assets that have not really compared or have not really put up the results is pretty damn strong. And I guess time will tell to know if it's time to sell or if this party continues in the memory space for South Korea. All right, we got 20 seconds. Let's see what we got. We're taking a look at Netflix, taking a look at CoreWeave, Duolingo, obviously Nvidia. We got a red pre-market, Nvidia down 2%. Let's see if that flips or if we're headed for a red day. We have some specific stocks, Netflix making a move, Duolingo making a downside move, and hopefully we can get some momentum back to the upside. Friday, February 27th, 9:30 a.m. The stock market is now open. All right. Happy Friday, folks. Wake your asses up. Let's get into it. Nvidia opens down 2%. Netflix on the move. She hit 96 a couple of seconds ago. 93.30. That's up 10%. I do think there will be a decent chunk of people that sell into this Netflix pump, but I'm sure there's plenty of institutions that are ready to buy back in now that the overhang is gone. Netflix, one of the only green names in a sea of red. Nvidia looks like she wants to go below 180. She's just lost 181. Nebius is down 7%. Microsoft down 2.6%. Oracle's down 4%. Hood's down 3%. SoFi, why is this thing getting wrecked every day? I don't know, but that is down. The S&P 500 down 1%. Rocket Lab down 9%. Rocket Lab's taking a hit right there. CoreWeave, oh my goodness. That's a little aggressive. 18% down. I don't think CoreWeave have that bad of an earnings. They have $70 billion in backlog for revenue. Goodness gracious. This thing was at 115 2 weeks ago. Back down to 80. Palantir's green, 136. Salesforce down 4. Amazon down 1. Flutter down 16. Flutter owns FanDuel, and it's another gambling company. It's actually has a large institutional float. So this one's getting sold off right here, down 15%. InnoData's down 5%. SoundHound actually up 2%. Dell's up 17%. I think Dell deserves it. Their margins are horrible, but they're growing. I mean, they beat revenue by $17 billion. Let me say that again. They beat fiscal year guidance by $17 billion. Obviously, a lot of that's happening because of Nvidia, but Dell right there getting a nice move as the market opens. Lunar's down 4%. Autodesk is up 3%. CrowdStrike's down 2%. Nubank was down 9% yesterday. That got a hit. That's down another 1% right here. Amcor's down 4%. Micron's down 2%. Uber down 0.5%. Rocket Lab now 64, down 10.9. Unfortunately, Rocket Lab had a good earnings. It's just, again, it's just like Hood. You know, like they just traded a high multiple. Even with the good earnings, the stock can get hit. And Rocket Lab didn't even miss on any of their metrics. But again, it is a bit of an expensive stock. But having said that, Rocket Lab was at 61 last week. So it's at 65. Until it breaks below 60, I think this might just be the range that it's stuck in. Duolingo down 17. Duolingo, a little recovery. It was at 85. Now it's at 97. So if you absolutely bottom ticked it, you're up about 10% right here. Not horrible. Ondas is down 5%. That's getting hit. Kratos diluted yesterday by $1 billion. That's why that stock is down 7%. I have no idea why SoFi is down 7%. But this is getting kind of stupid with SoFi. But it's down 7%. Where's Square? Did it hold 16? Yeah, it's holding 18%. That's crazy. In the fintech Armageddon, the street is really giving the benefit of the doubt to Square for cutting that many employees. 18%. That one's not slowing down. Celsius, that had a good earnings a couple days ago. That's up 1%. Palantir did get an upgrade to 180. Essentially, the gist of the upgrade was that if you assume Palantir will grow revenue at 50% until 2028, then their free cash flow multiple becomes incredibly reasonable at this price at 130. And that's why the analyst, I think it was from UBS, said, if you ever wanted a time to get in, this is the time. So Palantir right there, I guess that upgrade helping it get some momentum, up 1% right there. Nvidia still down below 181. TSSI, this is one of the big suppliers for Dell. That's correct. That's up 9%. Microsoft, are we still red? We are still red, down 2. Nvidia, again, still red. AMD getting hit as well. AMD officially back below 200. I don't even want to look at Broadcom. I'm going to guess 305. 314. Okay, way better than I expected. 314 right here on Broadcom. That's only down 2. UNH is down half. SanDisk down 2. The memory name's getting hit. Quantum, ew. D-Wave down 7%. IONQ had a good earnings, but that stock now down 7%. The Quantum name's getting some momentum to the downside here. Apple also goes red, unfortunately. CoreWeave down 18. That's taken down Nebius. Again, CoreWeave supply chain issues plus the load of debt that they talked about yesterday. I think that is the reason why they're down. But again, CoreWeave, look, I don't own CoreWeave, but if you believe that CapEx is only increasing and it's only growing and the GPUs can't be sold fast enough, CoreWeave's just going to make a lot of revenue. Now, they're probably not going to make a lot of profit for the time being. But then again, I don't think this company was ever judged on EPS. They were judged on different metrics, including top line growth. But maybe some cost rationalization would help them because, you know, growing OpEx at the level they're growing at versus revenue is a bit concerning for most investors. Nebius right there also down 8% with it on the day right here. And obviously all of that also coming back to Nvidia. Nvidia, are we losing 180? We lost 180, folks. 180 has been lost for the world's largest company. 179. Now, I would give the entire market an hour before making any rash decisions because I think a lot of this is continued momentum to the downside from yesterday. So I think this market needs to breathe it out a little bit, but everything right here is going red. Zeta's down 3. Probably doesn't deserve to be down 3. Butterfly Network's down 2. They had a great earnings. Big Bear is down 4. UiPath's down 4. Sezzle's down 1. Lulu's down 3. CRM, I mean, how the hell is CRM down another 5%, right? This is just, yeah, this is definitely some Friday action right here. And again, the major headline was PPI was a miss, and Jerusalem embassy is saying to leave Israel, which probably signals some more geopolitical tensions. Pure Storage, that's down 3. South Korea is down 1. Wow, UK government, UK staff have been temporarily withdrawn from Iran. It feels like shit's about to hit the fan, folks. All these countries are not going to take their ambassadors and their staff and their employees that work for the government out of these areas if they didn't think something could happen. EOSC, is that one still down? Wow, that's got to be, that's down another 17% after falling 40% yesterday. It's that idea that a stock that falls 80% can fall another 80%. I mean, goodness gracious. This one wrecked a lot of people, guys. This one wrecked a lot. Like, this is one of those Twitter names. And to the credit of those people, I don't think it was like a ludicrous decision to buy the stock. Management just screwed you over. Like, I think they said they would do XYZ million of revenue in November, and they missed so badly yesterday that it almost made you think the CEO was just lying about what he said in November. Because if you give the street an expectation, they're going to hold you to it. And when you miss by that wide of a margin, it just turned out to be a shady CEO. That stock now down another 18% on the day. SoFi right here, that stock also down 6.5%, still getting hit. Where's HIMS? HIMS is down another 6. I mean, it's everything. It is everything here. There's not really that much safety. Where's Walmart and Verizon? Walmart is actually up. Never mind. That's your safety. Verizon is up. That's your safety. Coca-Cola is up. That's your safety. All right. Value. Getting your safety today. Getting your safety. I mean, it makes sense. If CoreWeave's down 16, Verizon's probably going to catch a bid. Nvidia just above 180. Hit below 180 for a second. Circle's down 5. Snowflake down 1. United States seeks forfeiture of oil tanker and 1.8 million barrels of crude oil that supported Iran and Venezuela, as per the Justice Department. Okay, so these are now multiple headlines around more hostility around Iran. I mean, it feels like there might be something deeper here. Rocket Lab 67 bounced from 64. Do you think 2022 is back? You know, the parallels to 2022, once again, are good earnings get sold off, which end up being relatively bearish, and that's happened throughout the past month. Obviously, we just saw it happen with Nvidia. Having said that, 2022 did not have good earnings at all. If you go back in the earnings in 2022, every earnings, either they were missing numbers, big companies, or the numbers just weren't good. Fear and Greed, by the way, at 42 right now. Along with the fact that we were raising rates in 2022. So, I mean, yeah, does it feel like 2022? Yeah, I think it's undeniable that it feels like that to an extent. However, you did not have the highest positioning of sorts in a decade in 2022, which is what we're seeing right now, aka everyone's prepared for a crash. You also didn't see international markets up 20 to 30% across the board, not just South Korea, but Peru, Chile, Mexico. I mean, all their ETFs, Brazil, Argentina, have done incredible to start the year. That wasn't happening in 22. Gold and silver were also not pumping in 22. So I think there are some parallels in terms of the anecdotal feeling you have. But the reality is we were raising rates and earnings sucked. We're going to be cutting rates and earnings are good in 2026. And so that to me is the broader difference. But nonetheless, price action is obviously feeling the same way. That is how you say Chile, okay? If I said Chile, you guys would make more fun of me. So that is how it's said, I think. I hope that's how you say Chile. Uber right there, that's down. Tesla still holding above 400. 404 on Tessie. Silver, that's up 2.8. And then Meta, 660 to 641. 660 to 641. Andy, thank you for the super chat. You do not need to give the super chat, but I appreciate that. Thank you for the $20. Give me all the dips. Yeah, I guess put in the chat. What dip are you buying? I mean, I bought a lot of Nvidia yesterday. Okay, so I bought the dip. I mean, we'll see if things get even more stupid today. But the Nvidia sale actually ended up working out. I sold Nvidia at 104 yesterday. Now, granted, Nvidia is still down as well, so they kind of all move together. But I mean, I did my dip buying for the week. I bought a decent chunk yesterday, so I feel like I did what I had to do. Now we just got to see if the rest of the market cooperates. Nubank is weird, bro. Nubank doesn't deserve to be down 10%. That one's weird. I don't have a position in this one, but if you own this one, I feel like this is an easy buy the dip as well for the long term. That company just continues to crush it. Broadcom. See, Rocket did have good earnings. TSSI is one of the suppliers in Texas for Dell servers. This stock was a lot higher a while ago than they diluted. So it's been through the ringer, but that's why it's up right now. No, I didn't sell all my Nebbies. I sold 60% of it. I sold it to buy more Nvidia. That's why I sold it. It has nothing to do with Nebius, but again, if they're going to give a discount on a Max 7 like that, that's why I bought it. Chicago PMI. Are we getting that PMI data? Yes, I think we're getting it in 3 minutes. We actually do have a lot of macro data today. We have PMI. We have construction spending. We already got PPI. And we're getting oil rig production spending as well. All right, so we have about 3 different things that we're looking for. Chicago PMI, Street wants 52.8. So if we can beat 52.8, we'll probably be above 50. If we can get above 52.8, maybe we see a little bit of a reversal. Do you still have Amcor? Yes. Amcor, though, just like a lot of the other semiconductor names, has been struggling. And not only Amcor, but the semis in general. I don't know if anyone caught this yesterday, but SMH took a nasty dump yesterday, and IGV got the rebound. IGV had its best day in 2 years yesterday. Having said that, IGV is down 3% today, so it's really choppy back and forth. But I do think people sold semis and went into software yesterday. I mean, you saw Salesforce go up 5%. Now, again, it's down 4%, so I get it. Like, you get a good day, then you get a bad day, but it does feel like people sold off a lot of semis yesterday and just piled into SaaS, which isn't a horrible trade. But, Amcor, Nvidia, Nebius, Oracle, all those names are going to get hit. Broadcom, if that happens. It's just now today, people are selling off SaaS. So it's just like, it's not even a rotation. It's just everything's getting hit. Amazon right there, down 1, and then Adobe down 2.3. Do you think SoFi will be included in the S&P 500? They've got to get that stock above, like, what is it, 1850 or something? So realistically, they need to get it closer to 19. But I don't think it's an S&P 500 thing anymore for SoFi. For SoFi, it's like, dude, something's wrong with how the market's perceiving them. Or maybe it's just fintech Armageddon and SoFi is getting hit the worst out of it. But I don't think the S&P is going to save them here. I don't know. I really don't know. I don't know what Noto has to do to change the sort of frame of reference that people have about SoFi. But it continues to get hit. Nvidia bounced from 179 to 180.7. It's bouncing every time it touches below 180. It's either going to break below 180 and really fall, or it's going to stay in this little bouncy range and kind of be stuck below 182. CoreWeave still down 14. IONQ down 4. Broadcom down 2.6. Is your conviction still strong on Grab? Yes. However, the stock is just not moving. I mean, that it's one of those things where, I mean, you're either long or you think there's an opportunity cost. And I can understand everyone who thinks there's an opportunity cost, but I still believe it's undervalued. But I get it. There's not much to talk about when the stock's not moving. And so, I think we definitely have to give it till Q1 and see what the first growth quarter looks like for 2026. If you're in options, obviously, you're probably going to have to roll those out if the stock is not able to move. I think shares long-term are not going to be disappointing over the next coming years, especially because of the $7 billion in cash, the compounded growth rate of 40% EBITDA, but the stock's stuck. It's not going to give you the moves that CoreWeave gives you. And so there's not much you can talk about every day if the stock just isn't really cooperating here. CoreWeave down 14%, but getting a bounce off 78. Having said that, bought the stock last year. I don't think we can be naive enough to think you have to get gains in 1 year, even though, yes, for many stocks, you can get a gain in 1 day, forget 1 year. And I understand patience is very thin in this environment, but if we're talking about investing, you buy a stock, you don't expect it to just go up double in a year. Having said that, when Korea's up 50% in a week, not a week, a month, but it feels like a week, it obviously makes you question the opportunity cost, and that's fair. But that's just not how every stock is going to move. CrowdStrike right there down 3.6. PMI, what did we get? We got 57.7. That's a beat. That is a beat. The street wanted 52. We came in at 50.7. Is that going to help us on the S&P at all? S&P, yep, there's your green candle. It's very slight. I don't know if that's enough to save the day, but that is a pretty big beat. That's not a horrible print right there. And the S&P goes red right there. That green candle got rejected so quick. Got rejected at 683.40. It's right back down to 682.70. This is hilarious. Not even a couple of seconds of good news helping this market. Marathon up 12%. They missed on earnings yesterday, but they are transitioning to be an AI HPC play. So that's why it's getting some momentum. Shift 4. Yeah, this one took a hit as well. Dude, down another 8. Wasn't this down 16% yesterday? It's basically down 20% over the past 2 days. Shift 4 right there down 8%. Sunrun is down 15%. They also had earnings yesterday. Now they're down 26%. This was one of those solar names from back in the day. But they did have earnings yesterday. That one got hit. UBS downgrades the U.S. stock market. Thanks, UBS. Appreciate it. UBS downgrades U.S. equities, saying factors that powered years of outperformance are starting to fade. Dude, I bet you if the S&P was up 1% this morning, UBS would not. They would not send out that report to their clients. So much of this is rooted in the short-term price action. But to their credit, it is getting annoying. I mean, it's every week you think you make some momentum, and then it just falls right back. I mean, how many times have we seen S&P go from 680 to 692, back to 687, back up to 694, now back down to 683? Maybe next week we're at 690, and then we just fall right back. Maybe then we just fall right back. Oh, the Meta and Google headline. That's a good one. So last night, not confirmed by Meta or Google, but the information reported that Google is setting up a separate subsidiary to sell TPUs, which is super bullish Googs in my opinion, because they're going to make more revenue off these chips. And Meta is one of the first customers. Meta's getting ready to buy as early as next year. Google's moving beyond internal AI use. They're monetizing TPUs externally. And the joint venture structure suggests scaling the chip leasing business. Again, not confirmed by Meta or Google. But if this is the case, Meta's now buying chips from AMD, Nvidia, and Google. And this level of chip buying just goes to show how much compute Meta needs, but also goes to show that Google wants to be a player in the business. And, not only is Google monetizing AI from cloud and Gemini, but maybe they can monetize it on the hardware side. Google right there, 309.60. That is green as well. PayPal, 45.93. That's up about 1%. I don't mind the consolidation. It's just the way that it's happening. I think that's fair. And the way that it's happening is a whipsaw every week, up or down, which at the end of the day, consolidation is not the worst thing in the world. In fact, that's actually the best opportunity to, really develop meaningful positions. But I agree. When you get whipsawed up and then whipsawed down, like just CoreWeave as one example of many examples, that stock was over 100. Not even last week. It was over 100 yesterday. If I'm not wrong. Yeah, it was at 102 yesterday. It's at 82 today. Yeah, it was at 103.44 yesterday. I mean, I know it was at 120 3 weeks ago when Nvidia announced they're buying more. Like, it's just the level of whipsaw, I think, is what's really annoying people here. AppLovin, how's that doing? AppLovin's at 440. That is down 1%. China, are we down? China is slightly down as well. American Express down another 7. What is going on? Okay, it's not just SoFi, guys. There's something happening in fintech. Visa down 2. MasterCard down 2. Why is American Express? It took a 340 to 318 hit on the Citrini article. Then it pumped back to 335. Now it's right back down to 313. JP Morgan, that's down 4, below 300. Bank of America is down 5. 4 and 5% on the financials is not a joke. XLF is down 3. Did Trump come out with that whole credit card interest rate cap thing again? Like, why are the banks falling like this? What's the headline to get banks to get hit this bad? Gold and silver still moving. The 10-year below 4. Is there a credit issue? Well, we went through a bunch of different credit headlines over the week. I think there was a story yesterday about private credit, but there's a story about private credit every single day. So I don't know if that's necessarily the issue. This is from yesterday. I didn't see this headline. UBS warning 15% defaults could soar across the country because of the private credit bubble. Oh, wow. Here's another headline. I'm just seeing this 10 minutes ago. Rubric Capital tells investors some private credit firms are using accounting tools to mask leverage. I mean, that's probably definitely happening. But if the extent of the leverage in private credit is uglier than expected, I mean, yeah, that's where you have some bigger shit. Here's another headline. Private credit fund managed by KKR reports jump in troubled loans. Oh, boy. I think that's probably causing your bank sell-off today. You've got a lot of cascading private credit headlines back and forth that could be creating some bigger issues. Yeah, I'm looking at Robinhood Digest right now. I went on JP Morgan. It's actually a really good AI product, and it tells you exactly what could be happening. There's the first thing: credit fears impact. JP Morgan down, Blue Owl 1.4 billion liquidation. It's not really a new headline though. It's an older headline, but Nebius right there down 8%. Rock Lab down 5%. SoFi, goodness, this one's. I mean, I guess loans, and so SoFi has loans as well. I think their loans are relatively strong, but if there's any risk of loans getting hit, then yeah, SoFi is probably going to feel that pain. Zeta's down 4, Vertiv down 2, Snowflake down 2, Mercado Libre down or up about 0.5% here. Again, OpenAI raised 110 billion. That was the headline on the morning as well, and they raised it at a $730 billion valuation. That $730 billion is part of what's I think potentially also creating more fears around just like, too much money going into AI, but also it probably should be something bullish for the market to not be too upset about. They are finally getting well capitalized. Hood right there down 5% as that one continues to get hit. A spike in PPI today often predicts a spike in CPI, consumer inflation. Yeah, that is also fair. The PPI thing also, I mean, again, it's a little bit older because it's January, but I think this is not necessarily because of inflation. I really do think the Iran headlines are just making a lot of people say, maybe we don't need to own stocks for the next week or two. We'll wait till this plays out. Microsoft right there, 394. That's down 1.9 as well. Nvidia, once again, below 180. Let's see if she bounces right here. She's bounced at 179.70. She's got to lose that. And she lost it. 179.60. There it is. The sell-off continues. The sell-off continues. You needed to make instant coffee. We did not make the instant coffee this morning. You guys can blame me. It'd be funny if I go make the instant coffee right now and we turn green. That would actually be hilarious. Like, legitimately would be hilarious. MFS creditors warn there may be a 1.3 billion shortfall in collateral backing on their loans due to double pledges. Yeah, these headlines are stacking up on private credit. That one came out 4 minutes ago from Bloomberg. 1.3 billion shortfall because they don't have collateral? Goodness. I'm sorry, guys, but here's another one. BlackRock Private Debt Fund cuts its dividend to 17 cents from 25 cents. The fund is down 7.6%. The company says their priority is to improve portfolio credit quality by resolving challenged credits after struggling with exposure to e-commerce aggregators and troubled companies. I think that's like 5 headlines in the past 10 minutes about private credit. Where's BlackRock stock? BLK is, wow, it's down 5%. BlackRock doesn't fall that easily. Goodness. Yeah, you got to make the coffee now. Oh my gosh. Were they over leveraged? I mean, apparently, from what I'm reading on first glance, they have exposure to troubled e-commerce aggregators. What probably happened is this fund in 2019 to 2021 probably got approached by some random Shopify competitor that was raising at a ridiculous valuation. And BlackRock was like, sure. And, without underwriting it properly, because obviously rates were at zero. So, they didn't really need to worry, or not at zero, but rates were lower than they are today. They probably didn't care about the cost of capital. They didn't care about due diligence. They gave them the money. They put it in the fund. And now that e-commerce aggregator and other troubled companies are probably going belly up. Because if Shopify can't catch a bid in the public markets, who the hell is going to buy a Shopify competitor in the private markets? And now they're going to have to be creative. And one of their creative ways is cutting their dividend from 25 to 17 cents to keep the fund alive. And that seems like it's happening across KKR, Apollo, BlackRock. I mean, 2021, I think people forget, it was disgusting, the amount of stupid money that was going into nonsense companies. And, I appreciate crypto as an asset class. I thought the Web3 revolution was bullshit. I still think it is bullshit. You had Andreessen Horowitz, which is a firm I respect. They raised like $8 billion to invest in Web3 companies. None of those companies worked out. I mean, like the NFT nonsense, OpenSea, which was your NFT platform, raised at a $13 billion valuation. That company is barely worth $1 billion today. So I think a lot of that stuff is stuck in the system. And then we raised rates, the highest in 40 years. And, I think these credit funds are now starting to deal with the pain of that. Nebi's right here, still down 8% on the day. What about BMNR? BMNR is down 4. ETH's probably got to be down below 1900, just above 1900. BTC. BTC losing 66. Proper sell-off right here. Proper sell-off. So is it just the cocaine for a minute, or does he use anything else? I think on a day like this, when you see all the red, it's the excitement to try to understand why it's so red, while internally you're crying at the same time because it's so red. And when we're super green, it's the excitement to see why we're so green. But it swings both ways. I'm kidding. Yeah, I mean, realistically, it's the instant coffee, but we don't have the instant coffee today. Do I actually go make it, guys? Do I actually go make it? If we actually pump after I take a sip of instant coffee, it'll be the funniest shit ever. Like literally the funniest thing ever. Nvidia 179. Are we about to lose 179? No, we bounced off 179. Okay, once again, it's not losing 179. Make a private equity watch list. That's a good idea. We should do that. Private equity. Dude, you guys are really excited to make this coffee. Like, I don't think the coffee's actually going to change it. I'll do it, but like, I'm saying it as a joke. I'm not saying it as like a realistic way to freaking pump the markets. All right, we have Blackstone, Blue Owl, Apollo, KKR, and BlackRock here. Those are your private equity funds that we have to look at. Yeah, Brookfield will pull them in there as well. Hold on, we have more macro data. U.S. construction spending 0.3 versus 0.2. That's a beat. 0.3 versus 0.2. The Dow is down more than the NASDAQ. Really? Dow Jones is down 1.5. We are not at 50,000 anymore. The NASDAQ, yeah, NASDAQ's down 0.5. That's crazy. Oh, that's an ugly day because the Dow should have components that aren't getting hit as bad as the NASDAQ. Let's pull up the heat map. How bad is this, dude? Wow, this is ugly. Look at that. The only green is energy because people think we're about to strike Iran. And then Walmart because people want to pay 45 times for 2% margins. Everything else is just a mess. Look at the financials, just wrecked. Absolutely destroyed. Tech destroyed. Google's the only big tech company that's green. Healthcare, kind of. Pharmaceuticals are catching a bid. Everything else is getting hit. Yeah, the Dow definitely feeling it right here. What about Caterpillar? Is that name getting hit? Caterpillar, yep, that's down 2%. All right, go make this coffee so you guys don't kill me. And let's see if I can change the market.
Print. Joining us now is Max Kettner, Chief Multi-Asset Strategist at HSBC Bank. Thank you very much for being here, Max. Help us understand what exactly is going on under the surface, because you've got PPI, you've also got the block news and the potential, concern surrounding replacement of jobs with AI and other bots. How would you characterize what you're seeing on the screen today?
Yeah, look, I think there is a lot of narratives going on right now. Just you mentioned the job displacement narratives, and then obviously a couple of weeks ago, I think 2-3 weeks ago, we had the narratives around what kind of sector are we going to sell off today, right? I woke up every day and I thought, okay, which sector is it going to be? Is it the transport and the freight sector? Or is it going to be insurance? And then one day it was commercial real estate. So I think there's a bit of a sort of a narrative. Narrative inflation almost going on, and at the same time, we're focusing very, very little on the data. Look at, you mentioned PPI, you guys have just mentioned Chicago PMI, but actually not only in the US, when you look across the globe, you look at the most open, most manufacturing-driven economies. Look at the likes of Korea, Taiwan, Sweden, Netherlands, Czech Republic. You're really seeing across the board some proper cyclical momentum, particularly in the manufacturing sector building up. And I don't think there is enough emphasis on that. There is a bit too much emphasis on the AI narrative. Who knows what's going to happen in a couple of years? Who knows? I think we're really ignoring a little too much, and particularly the US rate side of things, ignoring too much what's happening under the hood.
I love that guy's accent. These freaking accents, dude. Is that Australian or British? I really wish I had that type of accent. Could you imagine the market open with that type of accent? It would be incredible. All right, there we go. But I do agree with what he's saying. The rate side of the question seems to be the bigger issue when we look at the discretionary spend across these sectors. All right, let's do it. So again, for those that don't know how to do it, you just take a spoon and then you put it in there, teaspoon and a half, and then you just drop it in. You just drop it in. And then you mix it together. And then boom, you've just created instant coffee. It's very simple. It's not hard to do. Cup of Joe. Why do they call it a cup of Joe, by the way? Why does Joe get the benefit? Why is it not like cup of Jack or something? But cup of Joe, less than 50 cents to make. Cheers to hopefully a green market. Sensational. All right. Dude, if this green candle on Nvidia actually is a real green candle, I will lose my shit. If this freaking green candle, that means we're judging it from 181.70. 181.70 is when I took the sip. If that thing actually moves up, then I'm going to be stuck drinking this stupid instant coffee for the rest of my life at this point. It was ridiculous. Where's the S&P? S&P... It's got a green candle. Oh, my goodness. Well, 182. Can we hold on to it, though? Can we hold on to it? That is the issue. Drink more. I can't drink more. It's so hot. I could barely take a sip. It's going to make me burn my throat drinking this thing to save the market. Oh, my gosh. Nubank's trying to go green. Drink a gallon of it. Shopify, little bounce. BMNR, little bounce. I mean, to be fair, a lot of these stocks got hit pretty hard. If they were going to bounce, like is CoreWeave going to go down 30%? If it doesn't bounce down 16, when is it going to bounce, right? You would think around this area. Monster's down 1. Got to see if we can make this move up. Here's another little ugly chart. Don't blame me on this, guys. You got to blame Cactus. Cactus keeps sending me these bearish charts. Literally, I can't do anything. If he sends me the bearish chart, that's what makes it onto the show. So I got to share what he's showing me. Share of U.S. loans in delinquency are at their highest since 2017. Since 2017. Once again, that is creating a deeper issue. Every time we look at a bad headline, we got to take another sip. That's the only way to combat these ugly headlines. S&P, again, Nvidia, 182.20. We can get above 182.50. That would be really nice to see. S&P as well, almost 685. Less talking, more drinking. There you go, 685, S&P. Look, I'm happy it's going up, but now this instant coffee has to be part of the show. And it's like, dude, I don't even like it that much. Like, it's okay, but like, take like 2 sips of it. It's not even that amazing. Although, I don't know why you guys pay $7 at Starbucks. Like, this is basically the same. Pound trade. You know, YouTube's also been starting to recommend me these freaking like coffee DIY videos in my shorts feed. I've started watching people like professionally make coffee, and you know, they put the coffee in before the water and all this stuff. I'm like, why am I watching this shit? But it's like, well, I kind of care about coffee now. Kind of care about my cup of joe at this point. All this bad news coming out makes me feel like this is the bottom. It's a fair point, but the private credit stuff, you know, we've been talking about it for almost 7 months now. Remember when the regional banks started blowing up back in October because of a couple bad private credit headlines? Now, it ended up being a wash, but, you know, these headlines need to have some conclusion to them. And the conclusion can't be, oh, let retail buy private credit in their 401ks. That is the climax of that event. It's not really the solution. You know, but that is what has been being pitched. Drink good coffee and we go to all-time highs. Why do they call it a Joe, though? Like, why is it a cup of Joe? Like, how did Joe get the benefit of being the guy who gets access to this name? Keep drinking. Okay, I'm drinking. Dude, I don't even have sugar in this. I went to the grocery store yesterday to do groceries, and I forgot to get sugar. So I literally, it's just black coffee here. Okay, what other headlines do we have? What other headlines? We have all of our macro data in. We looked at construction spending. We looked at this private credit stuff. The Iran stuff we talked about. OpenAI partnership we talked about. You don't need sugar. Okay, fair, but I do think I have to learn how to drink coffee without sugar. It's not impossible, but the sugar does help. Software name still selling off a bit right here. Oh, Jensen did another interview yesterday on Fox. See what Mr. Jensen said. Zscaler, they had a good earnings. They had a double beat. I don't know why that stock's down 14%. Just feels a little weird here. 14.2. Crowd as well, down 4. Nvidia's holding 182 though. I mean, if she can get to 183, maybe that. Look at that V, 179 to 182. We're right at high of days if she can break above 182.43. And then maybe even Bitcoin, look at that, 65.6 to 66.2. It's a $700 candle. You got some signs of life here. If we can just keep it going. But right now, it's the VIX is dropping as well. Let me take a look at the VIX. VIX VIX was at freaking 21. Now it's at 20.3, folks. I think S&P high of day 685.50. Dude, let me take another sip. Maybe this shit's actually working. Maybe this is. I don't want a red day either, bro. I bought a lot of Nvidia yesterday. So if I need to drink this freaking coffee so we can go green, then I'll freaking drink it. I am tired of the red. So damn tired of this shit. App Lovin' goes green. Literally just touched green. This might be the first day I actually finished the whole cup of coffee. Dude, imagine the people that just joined the stream for the first time today. They see the headline about Netflix and they're like, oh, let me check it out. Let's see what this person's talking about. Then they see a guy making instant coffee trying to pump the market by taking sips. This is where we're at in 2026. This is where we are at to get these markets to go higher. All right, here's Jensen from yesterday.
All of the robotic systems and cars and, farms and roads and, AI is just going to be everywhere. So we have plenty of runway, lots and lots of growth ahead of us.
And I'm doing the math, as you mentioned, all of those different areas. How can you fill all those orders?
Well, it'll take time. It'll take time, but we have lots of time. And I think we're at the beginning of probably about a decade of build out. People think that it looks like a lot of capacity.
A decade of build out. Either Jensen's talking his book or he's right. And even if it's 5 years instead of a decade, Nvidia doesn't deserve to be trading at 18 times next year's earnings.
Capacity being built, but in fact, it's a very small amount of the total capacity the world needs. The amount of computation we need is far greater than the amount of capacity we're putting online this year and next year. And so this is going to be a build out that's going to take well over a decade.
So with the build out, your Grace Blackwell chips, those are the ones that are in hot demand, still selling like crazy. I saw in Q4, Grace Blackwell Systems accounted for 2/3 of $62 billion in data center revenue. I know you want to reassure customers that you can fill their orders, but I wanted to ask you a pointed question. Is every Blackwell unit you can physically produce allocated through mid-2026?
Yeah, there's a home for every Blackwell we could build. And, we've done a good job planning our supply chain. Of course, we've been growing very, very fast and at very large scale now for a couple, 2-3 years.
Right.
And we've been building these complicated systems for quite some time. And so our supply chain is expansive. We've been working with our suppliers and all of our partners, securing and helping them plan their forecast and their build out plan. And then on the other side, these data centers take quite a long time to build now. And so we have visibility quite far ahead in the world.
In a way, so much of this is based on a blue sky anticipation. Everything's running smoothly. Everybody's able to borrow enough money to spend. We know the hyperscaler said that they're going to go nuts, $650 billion in spend this year alone. What if one chink in the armor happens? One thing gets hit into the bicycle spoke and trips things up. Do you prepare for something like that?
Well, it's not quite accidental like that, and it's not quite serendipitous like that. The world that I see, the world that we see, is a world that has seen a computer industry doing software the old way to now software done the new way. This is simply the way software has to be done going forward. Every piece of software will have artificial intelligence and tokens added to it. You could see that almost all of the world's software platforms are adding artificial intelligence to their platform. And the way that AI is produced, it's produced in real time. Just the reason why I call it an AI factory. These data centers are going to become factories, and these factories will generate revenues. They'll generate tokens, and they'll generate revenues. And so the CSPs that are building, the data centers that are building out NVIDIA's computing systems, they see demand. They have so much demand on their books from all of the companies in the world, all the startups in the world who are going to secure this compute to go generate tokens. And so on the one hand, NVIDIA's gear has, earmarked for customers all over the world on the one hand. On the other hand, the capacity that they're bringing online has been earmarked for customers. And so and to the extent that you could see that the GPUs we shipped, the computing systems we shipped 6 years ago, the pricing of that computer based on, it's called A100 amperes, even the spot price of those computers are going up. And so the demand is really through the roof.
You brought up software here. You've watched it lately. These white papers and these research notes have come out rendering, possibly in hypothetical terms, rendering so much software.
She's talking about Citrini.
Obsolete. It'll just go away because AI will replace it. Are you following that theory, that way of thinking? Do all these software companies just go away?
I think they have it completely wrong. These software companies are building tools. Well, first of all, not all software tools will stay around forever, but most of the tools that we use, they exist for a good reason. And intelligent beings like ourselves are using these tools, and they're very useful to us. There's a reason why they exist. There's a reason why we've been using it for a long time. What's likely to happen is that AI will become, these agents will be assistants of ours, and they will use these tools. And so it's very likely that the amount of tool users inside a company will grow because of agents. And of course, these companies that are developing these tools, they'll use agents to help them develop their tools as well. And so all these tool companies, all these tool companies will offer agents. These agents will help us use the tools. It's going to be great.
On the call, you didn't address the severe memory supply shortage. At least I didn't hear you do it. Micron calls it the worst shortage in 40 years. Your Blackwell GPUs come.
All right, so we talked about that, and we watched Jensen talk about memory yesterday. They said they're well supplied. Jensen was eating chicken and drinking beer with the SK Hynix CEO a couple months ago. They're good on memory. The broader issue is in memory for Nvidia. Does the market believe what Jensen said, which is that in 10 years, this overall build out will still be continued, or that the life cycle has 10 years left? I mean, right now the market's calling BS on that. They're barely thinking it has 10 months left. And I think that's why you're seeing this drop. I tried to drink as much Joe as I could, folks. I tried. It's not working. It worked for like 15 minutes, and we were headed back down. I tried, though. I really did try. I will keep trying, but we are taking a hit right here. Bitcoin back below 66. S&P. I mean, again, we had about 15 minutes of momentum to the upside, 685.40. We are going right back down. Right back down. Wall Street Journal. Officials at multiple federal agencies have raised concerns about the safety and reliability of Elon's XAI tools in recent months. Wow. Highlighting continuing disagreements within the U.S. government about which AI models to deploy. That's crazy, but this is why Pete Hegseth is so upset about Anthropic, because he probably got told by all of his subsidiaries that XAI sucks. I mean, that's how I'm reading this headline. If not, they would have switched overnight, right? Like if they could have switched, they probably would have just said, all right, screw you, Dario. We're moving on to Elon. And, I think Pete Hegseth is even more of a fan of Elon and everything that he's doing over Dario. But yeah, it seems like Claude is the only one that's like meaningfully creating a model that could be utilized within the government here. Elon did say that they're working on a new model ramp up that's coming out by the end of the summer. But I mean, dude, XAI has been kind of a joke when it compares to the progress of ChatGPT, Gemini, and Anthropic. Now, if they actually utilize the Defense Production Act to create the necessity for Anthropic to be used, that would also be very interesting, because that's not what Dario would want to do. Okay, I'm looking at this link right here that Chris sent me. This is Claude for Healthcare. Transforming healthcare from insight into actions. Yeah, I mean, this is a vertical that has been getting undercovered. Chris obviously works in healthcare, so this is something that he's probably been looking at. But we don't talk about healthcare enough as an industry. I mean, it is one of Palantir's biggest industries. It is one of those industries where drug discovery and obviously the efficiency of hospitals, all of us are going to be affected by it at one point. Either our family members or ourselves will be affected by that. And then second of all, you think of the amount of money, the trillions that are spent on healthcare every year. Like, it really is what, we talk about entertainment, we talk about media, we talk about supply chains, talk about logistics, advertising, obviously we talk about with Meta's recommendation engine, but healthcare is something that definitely gets undercovered. And I feel like that in and of itself is going to be something where Jensen's going to be right about these agents working inside of software within hospitals and pharmaceutical institutions. Like, that is just one of many industries that should be transformed via this broader revolution. Where's SoFi? Are we still getting hit? SoFi, little bounce, but still relatively stuck. That's 1770. Amazon going slightly green. Amazon 208. That's breaking out a little bit. Chris says it's also a HIPAA compliant model that some of the software I'm working on has integrated. Wall Street Journal trying to see if they have more stuff on this XAI news. Bullish Anthropic right here. Yep. And I would imagine Anthropic's trying to, more meaningfully integrate inside of these hospitals as well. Tough for retail to get an edge in healthcare investing. Yeah, that's also true. I mean, Tempest has been one of the only names that's really worked out for retail. The Teladocs of the world have burned so many retail investors. But again, like a platform like Tempest, the reason I never got it, and again, I'm really ignorant towards this, because I just feel like a lot of other companies will do everything that Tempest is doing as one vertical inside their business. So I do think the big guys are going to be able to meaningfully architect a healthcare strategy. Corey right there, that's down 17 still. Then Google going slightly green. Cost reduction and efficiency is good for all industries, but also that will lead to deflation eventually. There are several models to prove that. Just look at automotive driving. Well, that's the whole argument for a rate cut. Like, cost reduction and efficiency is really good for productivity gains and shareholder returns, but also, obviously, it's going to lead to more deflation, which is why when the Fed is saying we don't see the risk to the labor market from AI. I mean, Goolsby literally said this week. He said, I don't see the risk. It's like, okay, maybe the data is not showing like massive risk, but to say anecdotally you don't see a world in which people get laid off because of AI, which means maybe we should prepare for that by, lowering the ease of burden Americans have to deal with on credit cards and auto loans and mortgages by lowering rates. I mean, it's kind of crazy. Guys, not my fault. Cactus gave me another one. Private credit lenders to a German insurance broker are pushing for a higher margin on a 1.4 billion loan due to fears of the risks that AI poses to the sector. Yo, Bloomberg is pushing out these headlines today, dude. This is like the third one from Bloomberg. This is why all the banks are probably taking a hit. Private credit lenders to a German insurance broker are worried about the risk of AI. KKR is still clobbered today, down 5.4%. BlackRock still down 5% as well. Are you thinking of buying cybersecurity? The problem with the cybersecurity names is that the multiples are still high. Having said that, it's a stupid reason to not buy the cybersecurity names because the multiples have always been high. But I hate to say it, I can't buy CrowdStrike at 65 times next year's earnings when Nvidia's at 15 times. Like, now everything gets put up against Nvidia. Like, this is the greatest company of our lifetimes that's trading at this multiple. Again, if you don't believe they're actually going to do that growth, then Nvidia's a no touch. But Crowd, Shopify, these names are still kind of expensive, even after the decline. Now, again, they've always been expensive, so sometimes you got to just bite the bullet and buy them. But AppLovin's a little expensive on a sales basis, but man, AppLovin is cheap if you look at their top line growth. I mean, It is incredible. But Nvidia is also cheaper. Iran, what's happening with Iran? Iran's down 5. Yeah, I don't know why American Express is down 7 right here. That's a little weird. It's not even 10:30 yet. It feels like it's been so much longer. It's not even 10:30 and we're seeing this just gigantic shift in the financials. If you already have crowd, it's good price to DCA. Yeah, I agree. It's kind of like Palantir, right? Palantir's expensive here, but if you've already had it for so long, DCAing is not that scary. So same with a lot of the other names as well. Dell right there up 17. Dell really is the winner from yesterday. Dell is the winner from yesterday. Okay, let's finish up with some of that Jensen interview, and then we'll keep going from there.
More than 0, but we've guided to 0. And the reason for that is because we're still waiting for the customers in China to ascertain, to decide how much they're able to purchase on their side. We've been approved to some narrow licenses for some of the customers, and now the customers have to decide for themselves how much they're allowed to buy. I think in the final analysis, it's very clear now that the concern that China is going to use American technology to advance their AI, that's just poorly placed. Obviously, they have their own technology. Their chip companies have gone IPO. They're doing incredibly well. Huawei just had a record year because we were left out of that marketplace, blocked out of that marketplace. And so I think that the concerns about China relying on American technology to advance their AI industry is just poorly placed. AI includes energy, it includes the chip industry that we're part of. It also includes, of course, models and applications. And it's a 5-layer cake, if you will. And every single layer has an industry, and all of those industries American industry go compete around the world to go secure AI leadership for the United States.
I know you.
And so I think the decision to block Nvidia, block the United States out of the China market has surely proven to be the wrong decision.
I know that you have felt that way, that you feel that America's tech stack should be the stack upon which everybody in the world should be building. One of the other things as we go here is that there was a prediction in one of those research papers that was put on Substack that said that they surmise that once AI reaches superintelligence, there will be mass mayhem, dogs and cats living together, 10% unemployment, 40% decline in some stocks. How close are we, do you believe, to superintelligence?
With respect to unemployment, one of the things that's really helpful is to think about work, think about jobs, both as a task that's involved in the job, as well as the purpose of the job. As you know, for a software engineer, the job, the task that they do is coding, but the purpose of the job is solving problems. And so the problem that needs to be solved continues to exist, even if the coding is automated. One of the stories that I think I've told you before is about radiologists. Yeah. Radiology is partly about studying scans, and now scans are studied completely automatically with AI, and yet the number of radiologists in the world has increased. And the reason for that is because the goal of a radiologist is to diagnose disease and to help clients and help patients, get better. And that problem, the purpose doesn't change and doesn't go away. It's actually improved as a result of AI.
So Jensen once again making the argument that those jobs are going to end up getting better. This is one of the secretaries underneath Pete Hegseth. He's live. Let's see what he's saying about this Anthropic dispute,
if you will. So Emil, this is what they're asking for as far as we understand. And let me share this with the audience. It doesn't want its technology used for surveillance of US citizens or for autonomous lethal strikes without a human in the loop. That's the ask. What were the concessions?
Yeah, the concessions are pretty simple. We agreed in writing to ensure that the Department of War was following all laws and regulations, including the National Security Act of 1947, the FISA Act, and all other applicable laws and regulations, because mass surveillance of Americans is already illegal. So we were offering to put all of that language and affirm that we were following all laws in the contract. When it comes to autonomous weapons, similarly, we said we'll follow all laws, including a DoD directive that's been in place for years that governs how we would use any such weapons. And then we affirmed that there would be human oversight over every kind of part of the development process or engagement process or use of autonomous weapons. And he didn't like the word, I guess, as appropriate at the end of that sentence. But we believe we conceded to all their substantive demands. So it was surprising that out of nowhere they'd cut off negotiations.
So it appears that your differences are actually minor. Would that be accurate?
Yeah, and that's what was surprising. Is usually if your differences are minor, you get in a room, you try to hash them out, and instead, without any notice, publishes something about his conscience, and then doesn't engage. And it was difficult to understand why, because we were working pretty diligently on this, and we were at the final stages of a few words here or there where we agreed to what they wanted. So in substance, so it was very surprising, given that we negotiate with hundreds of technology companies, and this is the only one we've ever had that behavior from.
Are you still weighing using the Defense Production Act to compel Anthropic to basically have to use its product, or potentially are you weighing still making it a supply chain risk, which we heard from Anthropic say that this is almost contradictory proposals?
They're two different things, and I think depending on how today goes, at 5 o'clock, the Secretary of War, Pete Hegseth, gets to make the decision on how to reply. I've maintained my openness to continue dialogue through that deadline, but they've seemed to have launched sort of a PR campaign that was planned well before these negotiations sort of restarted on Tuesday. So I don't know. Their behavior is frankly unpredictable. I'm not sure what to expect.
So do you plan, though, on having more talks today, or does a decision just need to be made by today?
I offered more talks. If so long as they're in good faith, we're always open to talks, and we set a deadline.
I don't know, man. I don't think Dario, unless he gets explicit confirmation that they are not going to use the software for surveillance, which again, it's like an ego thing, because I think the DOW can say they're not, but they don't want to guarantee they're not. As he said, the quote was as appropriate, which Dario says he needs a guarantee. So that's going to be interesting. And then again, Sam Altman said this morning he thinks he can broker a deal between the two. Nvidia right there, 180, 160. I guess we're going to find out. What happens on this one. This would be the first high-profile contract or controversy that Anthropic's really got into if they completely walk away from this. Bitcoin right there, just below 66. JP Morgan down 3. Bank of America down 4. Roblox down 2. Redwire down 5. Chime down 6. Chime had a great day yesterday, completely getting erased. Snowflake's move going down. Guys, I don't know if chugging the coffee is going to help anymore. It's helping Palantir. My one true love, the coffee is helping Palantir. But besides that, I don't know. Why would Sam broker deal with Dario? That doesn't make sense. Yeah, I don't know. The Wall Street Journal reported that Sam thinks he can kind of get them in a room together and negotiate. Realistically, I don't think Sam wants OpenAI to get this contract because he knows that the optics of it are not going to look the best. Gemini probably doesn't want the contract either. Anthropic seems to be the best model, which is why they really want Anthropic to allow them to do this. But it looks like we're going to have some broader issues with how this plays out. Bill Clinton speaking in the next hour around the Epstein stuff. Let's get some coverage on that here as well.
And our House Oversight Committee is committed to getting answers. We're committed to transparency. We've already seen a lot of very powerful people who have been held accountable by having to resign in disgrace from various boards all over the world. We're going to continue to seek the truth, try to figure out how the government failed the victims, and try to hopefully hold more people accountable. That's what the purpose of this investigation is. I will say this, it's very difficult to get people in for these depositions that of great power and great wealth. And I used yesterday and today as an example. It took 7 months to get the Clintons in here, but we've got them in here, and we look forward to asking lots of questions that I think any curious media outlet in America would have. Yesterday, Ms. Clinton deferred a lot of questions to her husband today. There were at least a dozen times when she said, "You'll have to ask my husband that. I can't answer that." So we already had a big portfolio of questions for him, and that increased yesterday. So we look forward.
We didn't really get a lot of coverage yesterday because, again, as he said, Hillary just kept saying you're going to have to ask Bill that question. So I Guess maybe later today we'll get some more analysis on what exactly happened with that. S&P still down 0.5% on the day. Apple getting hit again as well. Apple was pushing 275 yesterday. U.S. State Department, Rubio will travel to Israel from March 2 to March 3 to discuss Iran, Lebanon, and Gaza. Okay, so then we're definitely not striking over the next week because, well, no, theoretically. Well, no, but still. But if Rubio's in Israel, I doubt we strike out of the fear of retaliation that they strike back, or they strike in Israel, even if the U.S. strikes them. That actually is a headline that should kind of calm markets down, at least for the next week. I mean, if Rubio's traveling there, I don't think we're necessarily going to strike at that same time. Well, we could, but it seems like Rubio will be there in the next 5 days. Also, the Pakistan-Afghanistan stuff is kind of crazy. They've kind of like pseudo-declared war against each other. It's becoming a bit ridiculous. So there was a strike yesterday. One of the fighter jets got hit. Afghanistan Foreign Ministry says our forces are capable of taking the battle deep into Pakistan. Pakistan bombed Taliban government forces in Afghanistan's major cities overnight on February 27th, the first time it has directly targeted its former allies, and described the situation, quote, as an open war, raising tensions in the region. Why can't we all be friends? That's right. Why can't we all be friends? Ugh. Again, dude, more geopolitical shit in the Northeast is just not what I think we want to see. S&P, a little bounce right there, 685. Headline from the Dems, 24 Democrats led by Schumer are sending a letter to Bessent demanding that tariff refunds begin immediately as the Supreme Court has struck down the Trump IEEPA tariffs. Okay, so remember yesterday, the Trump administration basically said they're going to use their previous justifications to solidify why they don't have to refund the $130 billion. And it looks like the Democrats want them to return that money as soon as possible. It's going to be a fight between lawyers at this point to figure out if the refunds actually happen, because the Supreme Court didn't give any guidance on it. If they did, it would be a bit different, but someone just spent $500,000 on 650 Meta calls expiring today. Yeah, the option flow I'm seeing here, I mean, some of it's bullish, a lot of it's bearish, though. You have a lot of puts for June S&P 650 coming in through the tape, and then you have IWM 250s. It's about 10 million on those S&P 650 puts. Not a lot of money given, it could also be hedging, but it kind of does feel like either we're going to 650 or we're going to 7,100. It's one or the other. But this whole charades of being stuck in the 680s on the S&P, like it feels like it wants to break one way up or down. And I feel like more people think it's breaking down than up just because of how much sentiment has been hit hard. And if we go to 650 on the S&P, Nvidia's probably going to 160. And Palantir's probably going to 100. Rock Lab's going to 45. Robinhood's going to 40. I mean, if we take that 5% drop, we're going down. Duolingo, nice rebound from 85 to 100. So good for Duolingo here, but still down 14% on the day. Yeah, that's the worst part about these stocks that have already taken this big of a hit. The index hasn't taken the hit. So you can't even say, oh, well, the stock is down because the index is down. It's like, no, the growth stocks are down because growth stocks are down. The index is flat, which means if the index takes a 5% hit, every one of these growth stocks is going down the drain. Like it is inevitable. If S&P is down 5, it will be so bloody. on our favorite names. I mean, Nebius is going back to 60. Like, it's not, there's not even a doubt in my mind. So realistically, the broadening that's holding up the S&P is actually the best thing for these growth stocks to at least somewhat remain stable. Grab's going to like $1. SoFi's going to like $10. Like, it's going to be so bad if we see 650 on the S&P. It's just the truth. It's just that, like, these growth stocks are not going to hold. If the market's selling off the index, the Qs, the Dow, the IWM, we're taking some pain. Having said that, that probably will be an amazing opportunity. But also, it's like, will the sentiment even be there? S&P's down 5. Microsoft's probably 350, which would be insane. But it could happen. Is Netflix holding the pump? Netflix, not as high as it was before, but 8%. Still decent. It's one of these names that held some good news in the sea of red. XYZ as well. Block still holding 17. Silver's up. That's correct. Hard not to like Hood at these levels with the current macro environment. Well, no, the problem with Hood right here is nothing about the company. And they're going to have an event on March 4th. I'm sure they're going to introduce a bunch of new products. It's crypto. Having said that, Hood had the death cross. We talked about that on Tuesday, so that usually signals a bottom. Also, again, dude, I really think today is red more so because of options. Yeah, the Iran headlines are there, but there were a lot of options expiring today, and a lot of them were on Nvidia. And if the stock couldn't get to the strike price that most people had their options at, which was around 200, 205, it's going to naturally cause a sell-off. So I don't know if I would read too much into it. CoreWeave, every earnings, they talk about issues and that thing dumps. Then it recovers after a couple of weeks. Software getting wrecked again is just not able to hold the momentum from yesterday. And then in general, you got this Iran news, which is creating more pain. We missed the beginning of the interview with Sam Altman. Let's go to that and see what they talked about early on here.
Are met, and I think there's going to be a lot of people who are going to read that and say, what does that mean?
Well, thanks for having me. I appreciate it, and we're excited about what we announced. And yeah, we have a significant investment that we're making. It's in 2 tranches, as we mentioned, and the first tranche will be next month here, and $15 billion, and the second tranche will come when certain milestones are met. And we're excited about the investment we're making. If you think about it, it's so early right now in the AI space, and OpenAI is off to an amazing start. They're going to be one of the very big winners, we believe, long term. I think we can help them quite a bit as part of this partnership. I think just having their offerings available in Bedrock, being able to leverage Trainium, which gives them 30 to 40% better price performance, matters a lot in AI. And I think it's going to be a very strong long-term partnership where we're going to also be happy about the investment. It'll yield a good return for Amazon over a long period of time.
So, Andy, one of the things that's interesting about this is OpenAI, it says, will consume 2 gigawatts of Trainium capacity through AWS infrastructure to support the demand for what's called stateful runtime, environment frontier, and other advanced workloads, some of which is going to be exclusive to Amazon. My question to you is twofold. One is, how long is that exclusivity period for? And 2, how much revenue do you imagine you will ultimately get paid by OpenAI?
Well, there are multiple components of this. If you think about we've collaborated and invented together on a stateful runtime environment powered by OpenAI's GPT models that will be available in Bedrock. And if you think about if you're an AI application developer, you don't want to start from scratch every time you're actually using models. And so being able to access state, whether it's memory or identity, or being able to call tools or call out to compute, being able to do that in a stateful way where we're together training that stateful runtime environment on AWS's infrastructure, There's nothing else like that today. It's really the next generation of how AI developers are going to build their AI applications. And then, the training, today we now have the two largest AI labs who are both significantly betting on Trainium, which is exciting. And, and the relationship we're building is very unique and it's long-term, and we'll have this partnership for a long time.
Sam, can you speak to that in terms of just what you think the business ultimately looks like with Amazon? Obviously, they just made a big $200 billion infrastructure investment. A lot of people had asked questions about it, and now this may very well be part of that answer.
Yeah, we continue to see just rapidly growing demand. The Codex in particular, I think it grew like 30-something% in the last week. And that is an indication of what's happening with enterprise and what people are ready to do now. As we started to look at the growth that is coming, we realized we did not have enough compute to support that. We're excited, thrilled to get this additional Trainium capacity. And I think it'll go to great use with customers. We also think, as Andy was saying, that Amazon can deliver so much more to us in terms of new demand and new opportunities in the market, that there will be huge incremental revenue here into the whole ecosystem. And we're thrilled to get to do that.
I mean, that's the promise, right? There is more demand than we can handle. Therefore, we need more compute. Therefore, there's going to be more revenue opportunities if we have the compute, which is why we're going to continue to spend. And that's why Amazon, Nvidia, et cetera, are going to continue to invest in companies like OpenAI. PayPal actually catching a bid right there, up 1%. Google up 0.5% as well. S&P, I think it's closer to the high of days right here, 685.60. Got above 685.50, which would be nice, but we need to see it kind of really crack 686. And then Nvidia 182 for the third time today. Well, that's what OpenAI is promising, and hopefully that ends up happening. It's kind of what needs to happen to make this thing work. What about the Elon OpenAI lawsuit? The judge already came out 2 days ago and said they dismissed Elon's motions. So yeah, I mean, Elon can counter the appeal, but it looks like OpenAI probably doesn't have to deal with any serious lawsuit. I mean, the lawsuit wasn't that good in the first place. I mean, like theoretically, he has a claim. The problem is legally, it's just tough to make the argument. So yeah, it doesn't seem like OpenAI necessarily has to worry about that. Marvell, are we bouncing? Marvell, a little bounce right there at 80. Speaking of Elon, though, we do have a lot of humanoid robots that are starting to get some more momentum. BMW came out today and said they are now deploying humanoid robots in one of their factories. Let me pull up the exact country. In one of the factory lines in Germany, as per the Financial Times. And it's going to be using robots from one of Sweden's humanoid robotic company. So it's good to see. Got robots doing some important things. Hopefully they can do a lot more things in the coming years, and that would be really important for the Tesla story as well. Dude, why is SoFi continuing to dump here? My goodness, low of days. Steve was talking about it last night. He said, hey, this is just being seen as a bank. And we've had this debate for literally 3 years that it is just a bank. I've come around on that debate and I've said, look, it is just a bank, but they're growing fast, so who cares? But if the market doesn't care about the growth and they only care about tangible book, because that's how banks are valued, I just don't think after the stock was stuck at 25 for like 6 months that randomly the market woke up and was like, yeah, no, it's just a bank. Like, that to me feels weird. And if that is happening, then okay, but it's kind of weird to think that would happen. What do you think about precious metals? Once again, my perspective on this continues to be, what I've thought for a while. I think precious metals are in a super cycle, and I think they have momentum. I just think that gold and silver are being seen as speculative assets. They're not being seen as flights to safety. And that's not because the price action has moved up, because these assets were depressed for like the past 10 years. So obviously they broke out. But the level of daily swings on gold and silver to me is not healthy. It's not natural. And right now it feels great because silver's up 7%. But 3 weeks ago when silver was down 30%, it didn't feel great. So I think if you're buying this with an expectation of, I buy silver and 20 years from now I wake up, it'll probably be higher, than sure. But the idea of playing this to kind of culminate a performative move on your yearly performance that beats the S&P, I think it can help, but it's just, I think you're taking a bigger risk after these assets have made such a big move. And if there's any change to the thesis around supply-demand imbalance around the precious metals, I think everything gets hit. I also think palladium and platinum and copper, I don't think there's a real thesis on any of them. I think there is some fundamental support, but I think they are all contingent on the price action of gold and silver, just like Cardano is contingent on Bitcoin and Ethereum. And like, I just look at the charts. Like, just take 10 minutes and look at the charts over the past couple of years. They go up and down with gold and silver. So to me, realistically, betting on metals is betting on gold and silver continuing to rally, which, if we keep money printing, they probably will. But Kevin Warsh is a bit of a hawk. And although he wants to lower rates, he doesn't want to do QE, which to me is a headwind. I mean, that's why gold fell 30 or silver fell 30% and gold was down like 15% the day he was announced as the Fed chair. Like, if we somewhat get our monetary policy under control, I don't think gold and silver easily become the safe havens people think that they are. Especially when you have companies that are trading at less than 20 times earnings that are growing 50% year over year. It feels like those might be potentially better bets. Bank of America says Nvidia is at a generational growth moment with an inspirational valuation and raises price target to 300. We believe Nvidia more than delivered, presents a compelling valuation. All right. Bank of America defending the name right here for Nvidia. Amazon slightly green. SoFi still getting clobbered. I don't know, guys. I really have no idea what's going on with SoFi. I think Tanner would maybe have some analysis here to explain what's happening, but this is not retail. This is some institution that's liquidating their SoFi right now. At least that's what it feels like. Maybe it's a little bit of retail, but I also don't think it's that bad today for there to be margin calls across. I mean, the S&P is barely down 0.5%. Like, this should not be a margin call type of day that's creating massive liquidations across retail portfolios. By the way, the users that benefit the most from Netflix going up are Robinhood users, because Robinhood is a platform that has Netflix as one of its top 10 assets owned. We talked about that a couple weeks ago, that Robinhood now has Netflix in the top 10 companies that are owned on the platform, which is really good because GameStop used to be in those top 10. It got replaced for the first time in 5 years with Netflix in early February. So you had a bunch of retail on Hood that bought the dip on Netflix. Their accounts are all up 10% today, which is good for the broader AUC for Robinhood. Affirm, is that one getting hit? Affirm is down 7%. That one is also getting hit. What else do we see? Dell's up almost 20. Yup. Dell right there, 19.6%. Restaurants emerge as bright spot for U.S. job growth as consumers seek treats. That tells me that people probably are thinking of getting a second job at restaurants as well. We looked at that second job stat from a couple weeks ago, that more Americans in the history of the past 10 years are now getting a second job. Oh, we got Rokana live. Let's see what he's saying here as well.
I believe we will have the votes to subpoena him, and we will work with Ranking Member Garcia to make sure that he comes before our committee next.
A couple questions. Go ahead.
Mentioning foreign intelligence. Virginia Giuffre never accused the former President Bill Clinton of wrongdoing, but she did say that he visited Epstein's Island, that she saw him there. But the former president said he never went. You mentioned how he's let Nick several times. We know that he claimed to cut off ties with Epstein, but then was found to have visited the island. So who do you believe, Virginia Giuffre or President Bush?
Those questions are actually going to be asked today in this deposition. So we look forward to those questions.
Just a short time ago, your Republican colleagues said that there was some type of exchange yesterday with the secretary where she was screaming. What is your characterization of what happened?
I hope that the Republicans release the actual video unedited immediately, because to say that the secretary was screaming, I think is beyond a mischaracterization. What happened yesterday was a disgrace. To be asking about UFOs, Pizzagate, conspiracy theories, you yourself are going to see the types of questions that she was asked to defend her husband, not directly to her, not information about her. I think they need to release the videos right now. You should all be let in this immediately.
So the coverage right there is they're trying to get Trump to testify in the Epstein probe. I mean, if they get Trump and Lutnick to testify in that would be quite incredible. But right now they have Clinton. Banks, folks, are having their worst day since April of 2025. Let's get some coverage on that. But banks' worst day since April of last year.
Quality fears. We have a bunch of these BDCs reporting, business development companies, which are showcasing a slew of troubled loans. And as a result, they're slashing the dividends, the distributions that they pay investors, some pretty significantly. I know you guys were watching that FSK, the Future Standard KKR BDC, that yesterday was down about 15% as a result of this. They slashed their distribution by about more than 30%. On a quarter-over-quarter basis. And you've got this MFIC, that's a BDC overseen by Apollo, kind of a similar story, not as severe of a slashing of that distribution. And then you've got MFS, which is the UK mortgage finance company that essentially imploded, and it really rhymes with a lot of the situations we saw back in the fall with the cockroaches and the alleged fraud and the double pledging of assets. And so we're starting to see the banks that were exposed there, and that's creating some additional jitters. You've got Jefferies down significantly on this because it had exposure, Apollo exposure to both that as well as what I just mentioned with regard to the BDC, and then KKR. Again, you see the manager there down 5.4%. Its BDC was down pretty significantly yesterday too. So all of this is credit quality concerns as well as just overall sentiment concerns that have already been so volatile this year as a result of the slew of
Also,
factors.
you can't ignore the credit card issuers. Capital One's down 20% for the year. Visa, MasterCard down 10. You mentioned Amex. I don't know if that's AI disintermediation or concerns about consumption growth slowing and transaction volume?
It's a good question. I mean, as you kind of try and figure out what is at stake with the consumer right now, a lot of these troubled loans in the BDC world were things that were exposed to consumers. They were kind of old world types of businesses, dental roll-ups, residential construction companies, things like that. So maybe there's a read-through on kind of the state of the consumer and the state of the broader economy.
No shortage of topics for you to talk to Jamie Dimon about on Monday.
No shortage.
No.
Never. They're never.
Damn, dude. Worst day since April 25 for banks. We got another headline right here from Bloomberg. Again, Bloomberg's publishing a lot of these today. Private credit manager Invisio Capital Corp has crafted a plan for one of its funds to deal with redemption requests from large investors as firms face elevated withdrawal pressure across the broader market. Basically, a lot of these private credit funds are getting phone calls of people saying they want to take their money out. And obviously, if everyone takes their money out, that means they have to sell off a lot of stuff, likely at a loss. And so they are trying to come up with creative ways to keep people's money in the funds. But the fact that you have that much conversation, Dell right there, 20% on the day. I mean, that's why this private credit stuff is continuing to increase. See, again, now the thing about Dell is this is stupid, right? Dell deserves to get a pump right here. Dell's operating margins are less than 5%. And the street's like, oh, well, they just beat revenues by 20%, so we deserve to give them a premium. Nvidia beat revenues by 27% for the guide. Their margins are 50% net income, 75% gross. Nvidia is getting sold off. By the way, the only reason Dell beat any of the guidance expectations is because of Nvidia. So this is where you could just tell the market is really scared about buying a $4.5 trillion company. I feel like that's another reason why you're seeing the divergence. But Dell at 98 billion, even though they barely make a profit, that's what's getting the market to be more excited. And again, I mean, like, it is what it is. Dell, maybe the valuation is not as compelling as Nvidia, but the market cap is. And you're just seeing more money rotate into some of these smaller names. Amazon right here going a little green at 208.70. VIX is below 20 now. I mean, you do have a little pump on the S&P, 682 to 685. So that VIX dropping below 20 has created 681 to 685, a little bit of a bounce right there. But we're still getting hit. All right, what other headlines do we have? I mean, I don't think there's anything else too crazy. SoFi denied me a loan with an 802 credit score because I don't make $100K a year, if that tells you the quality of the demand for their loans. Yeah, SoFi's loans have never been the issue, or the credit quality has never been the issue, but I think the perception is that every loan in general is going to take more scrutiny and deal with potentially more delinquency rates. SoFi's delinquency peaked in March of 25, though. If you look at their number, they have not spiked up delinquencies in about a year. So again, if that's what the street's worried about. I mean, look, if it comes down to this whole AWS of fintech and not getting enough deals and the street's upset that there's not more than lending to the core business, then maybe that's the narrative issue that SoFi's having. Rocket Lab right there, that's down 8%, 7.8 down. The VIX was over 21 when you made the instant coffee. All right, so I got the VIX down to 19, and I got the S&P up 4 points. VIX now up 7% on the day. Autodesk is holding up. That's correct. I did not buy more SoFi here. Again, realistically, I know it's boring, but it's just Nvidia. I know it's boring, but I don't know. I think this one bounces back. Having said that, market goes down, everything goes down. So the banks look kind of interesting, though. I mean, worst day since April 25. How much private credit risk does JP Morgan have? I think is the question. Probably more than zero, but JP Morgan's not going to go to zero if private credit becomes a bigger issue. The regionals, I think, is the ones maybe to stay away from. Yeah, KRE down 4% right here until we see what changes. Are you selling covered calls on some names here? Yeah, I mean, I have covered calls across the entire portfolio. That helps. I do think this is more of a covered call market than not. I mean, until we flip bullish, which we have not on a technical level, sentiment level, or earnings level, in terms of earnings being rewarded by the street, flipped bullish. I think you yield the volatility. And these stocks have great, Nvidia has great premiums. Nebius we've been talking about Nebius premiums for a while. It's one of the reasons I liked it as well. Netflix has recently started to get good premiums. It's going to have great premiums today if you're not selling your shares. I mean, Rocket Lab's always had great premiums. People are willing to buy calls in this market, because I'm not willing to buy calls in this market. This is not the atmosphere to be buying calls hand over fist, but selling calls feels a bit more reasonable. Why covered calls and not cash puts? I mean, well, so again, cash, if the market's going down, then the likelihood of being assigned on your cash puts is higher, right? So that's one reason. But number two is, if you already have a substantial amount of shares in different companies, then you can use those to just yield you the premium. The risk is, if we go super bullish, you get stuck in them. But we're not super bullish. I mean, just nothing has necessarily shown super bullish momentum. French Foreign Ministry advises French to not travel to Israel following security situation in Iran. Once again, that's France, the UK, and the US Embassy now telling people to not go to Israel. And if you're in Israel, to leave because of potential conflicts. 3.975 right here on the 10-year. as that starts coming down. Well, on another note, what are people doing over the weekend? Maybe we all just need a weekend off from all this madness. Although this week wasn't that bad. What ended up messing it up was Nvidia earnings and the reaction to it. The week was actually going pretty good by Wednesday. Like, things were actually not as bad. I know the whole Citrini nonsense happened on Monday, but that kind of recovered by Wednesday. We were pushing 695 on the S&P this week. And then we had the Nvidia stuff. Paying taxes. Oh, dude, I was going through my taxes last night. I was going heavy into ChatGPT to help try to figure out, how do I navigate this tax situation? I mean, I feel like I've expensed everything I can expense. I'm going to be paying a shit ton of taxes. There's nothing more I can do. So yeah, I mean, that's something to watch out for April. I mean, April 15th, at least in the States, people are going to have to pay their taxes. That's going to require probably selling some stock. I'll be drinking heavily over the weekend. Barbecue. Hopefully it doesn't snow again over the weekend in the Northeast. That would be nice. Dude, yesterday the weather was amazing. I mean, it snowed heavy on Tuesday, and then by yesterday it was almost 50 degrees outside. It was great. ChatGPT says I can't help you avoid taxes. I was just like, hey, what about this? What about this? Like, can I expense this? Can I do that? And I feel like all my expenses are pretty reasonable. I don't have a ton because it doesn't take a ton of expenses to sit in front of your computer. So it's one of those things where it's like you can expense the most you can expense. Your solo 401k, again, this is something people should look into, especially if you have an LLC. I'm not a tax consultant, but look into a solo 401k. It's a major tax benefit. And eventually you will pay taxes on the income, but you're allowed to write off a substantial amount if you are self-employed over 30 years. So that's one thing that's helping out my taxes, but outside of that, you just got to pay it. Just got to pay it. Tom's to celebrate my birthday. Tom, happy birthday to you. Hopefully you enjoy the birthday. I don't think I'm doing anything this weekend. Honestly, I have a lot of things in the back end that I have to finish. Like I bought a notebook yesterday, and I just how people have like to-do lists? I legit took a pen and just started writing. I wrote down 20 things I need to do that I'm just backed up on. And over the weekend, I just want to get a lot of that stuff done. It's just stuff that I don't think I've been putting off, but it's just been getting left behind, especially since we had the meetup, because since then just so much just got stuck, and I would love to just make some progress and get some shit done. That would be nice. Buy an espresso machine is one of those things. Dude, but then I can't make the instant coffee. Wait till you have kids, the list gets longer, and you never get around to it. Dude, I actually sat down yesterday and started writing stuff down, and I was like, I have a lot of shit that this thing should have been done in early January. Why have I not done it? And I'm like, goodness, bro, some of this stuff, you just have to cross off the list and get it done. And so I really would like to make some progress on that this weekend. I'm listing my house for sale this weekend. Bought the house in 2017. Should make 75% on it. Congrats. That would be incredible. 75% move in 7 years. Not too crazy. Any news on the Singapore meetup? So we had a meeting last weekend. The best thing I can tell you right now is that definitely last week of June. The venue, we are getting confirmed. Again, my uncle's in Singapore, so he's been talking with the people at the venue. And more likely than not, we already know which venue it is. But again, we do have some time before we need to finalize it. But if you are thinking of it, last week of June is most likely when it's happening. And it should be a fun time. And that week is actually, I think that'll be my first vacation in years. But that week, I'll still be able to do the market open every day that week. Probably not the market close. but I think I'm going to go to Indonesia and Bali during that time as well. So that should be fun. But I've also never been to Singapore. So I'm excited. LA meetup again, March 28th. There's a link in the chat for those that are coming to the LA meetup. Singapore, ironically, is one of the top 5 countries that watches the channel. So I didn't know that many people from Singapore keep up with it. Next episode of the pod is next Friday. Next Friday. Steve and I are recording it on Thursday. I think you guys will like the guest. That'll be out on Friday. Duolingo still down 15. Robinhood down 4. Adobe down half. Nvidia is just stuck at 181. Yeah, I see all my Singaporeans in the chat. It'll be fun, dude. My uncle has lived there for so long. I've never visited him there. I've heard so much about Singapore. I know it's one of the cleanest countries in the world, and people don't own cars, and it's also very strict. So safety is something that's not something you have to worry about too much. So it'll be really cool. I'm in Thai, but I definitely will join. Yeah, I think a lot of the surrounding countries, like Sachin, he lives in Malaysia. He's probably going to come. So I should have details on that next week, but we're just confirming the venue, and then we should be good to go. Yeah, so no capital gains tax is also amazing. Same with Dubai. Dude, no capital gains tax is crazy. It's just, imagine not having to worry every time you sell. S&P 685. Don't bring weed, they'll kill you. Yeah, I heard. My uncle was like, bro, check your bag twice. He's like, there should be nothing in there that could compromise you. I mean, I'm not walking around with tons of cocaine or anything anyway, but still, it's like, he was like, you can't even jaywalk in Singapore. He's like, you gotta play by the rules down there, which is fair. That's what happened to that Russian that WNBA player, Brittany Griner, I think was her name. She had a weed pen in Russia. I think she just forgot she had a weed pen in her bag, and then we had to give up one of the most notorious Russian arms dealers as a hostage exchange to get her back. Because the Russian were like, oh, you're going to bring weed to our country and you're a famous basketball player? Yeah. You're going to be an asset for us now. So definitely not something you want to mess around with. Yeah, it was definitely a horrible trade, bro. We gave up a Russian arms dealer. Dude had murdered so many people for a basketball player. It's like, look, I mean, like, at the end of the day, you want to bring Americans back home, but man, we did not win that trade. Sounds like you're missing out on a lot of deductions, Wi-Fi, car payment, insurance, rent. Dude, trust me, I've got all those. I've got a lot of deductions, but it's just still, it's not a CapEx heavy business. It's a laptop. Like, at the end of the day, the solo 401k, I think, is my biggest deduction, but I've tried to take off as much as I can. My accountant's good. He's helped advise, but there's only so much you can write off. Move to Singapore. I think it would be super cool to move to an area where the tax laws are more favorable, but genuinely, and it's so corny, but genuinely, when I walk down the street and I see the World Trade Center, I remember why I moved here. I love being close to New York. I really do. There's something about being close to the mecca of finance that I just love. And genuinely, I don't even think I'm just saying that. Like, the amount of productivity, like, literally, I messaged someone that I've always been wanting to connect with for the past couple of months. I just messaged them on X yesterday. I saw that they followed me. I was like, oh, I didn't even know they followed me. He was like, yo, are you in New York? Let's get some coffee. And they're like, yeah, I'll be there in 2 weeks. Let's get some coffee. And it's just like, it's New York is the hub. If I was in Texas, that doesn't happen as easily. Like people go from New York to San Francisco all the time. And to be able to meet people, make connections, actually shake their hand, have a coffee with them, talk to them, because I'm 20 minutes away, it really does help in at least the field that I'm in. And so I want to get rich enough to live in New York and like live lavishly in New York. Like that would be the ultimate dream. Even if I have to pay a shit ton in taxes, who cares? Like I want to be rich enough where I don't even care. That's probably going to take some time, but like living with a Central Park high-rise view in Manhattan, oh my goodness, that would be incredible. But we're not there yet. We are not there yet. You do that in Miami. That's true. But again, Miami is not New York. I love Miami. The way Palantir is now advertising for internships in Miami. And Miami's fun, dude. I'm not gonna lie. I spent 3 days there and I just walking around was amazing. But also I was staying with Derek, and Derek lives in like the billionaire part of Miami. So of course it was fun because like I was like walking around the richest parts of Miami. I don't think I'm at the level where I could afford to live in, that part of Miami. So I don't know if I experienced the other parts of Miami where it's probably fun, but it's not like, getting the types of views and going to those types of areas. So I feel like Miami gets really fun when you actually make a lot of money. Having said that, no state income tax. Same thing with New York, though. Like, I don't want to live in New York unless I can live like a luxurious life in New York. Otherwise, what's the point? I don't want to be struggling in New York. If I'm going to live somewhere that costs a lot of money to live, then I want to like actually be able to afford it with no issues. Now, you can't be living paycheck to paycheck in Miami or New York and trying to be a hotshot. So I think that's when you move there. Palantir is getting a pump right here, 138. 1.5. That's making a little bit more momentum. Robinhood saying if you sign up for gold, we're giving away $1 million. Okay, that's the same thing they did last year around their gold event. They gave away $1 million. I think they got like 80,000 people that signed up for this. So they made $5 million off giving away $1 million. It's a really simple promo. Easy for them to do. Palantir getting a bid. Netflix still making a move. Nebby is still down. Miami doesn't have the same vibe as NYC. I lived in both for decades. Yeah, and I don't even live in New York, and I still feel the vibes of it, So I just like being close to it. Apple's down 1.6. S&P actually high of day, folks. 686 right there. Tell me Nvidia's 182.50. Nope, Nvidia's still stuck. 180.170. Okay, so S&P and Nvidia diverging, but this is the high of day for the S&P at around 1120. Nebius, are we still tanking? Wow, 9%. Ew. Is this because of CoreWeave? CoreWeave's basically low of day, 18. It had a bounce at one point, continuing to get hit. 79.80. That means Iren's got to be down at least 5. Iren's down 8. All the data centers getting dumped right here. Oracle getting dumped. I guess I would blame CoreWeave for this. Nebius, CoreWeave kind of in that same bucket. Applied Digital, that's down 7. Cypher's down 7. Wolf down 8. This is, oh my goodness. This is so ugly. Nebius was at freaking 107 on Monday, dude. On Monday. So what you got? CoreWeave's hitting the whole HPC sector. How come you sold Nebius? I sold it to buy more Nvidia. But Nvidia's down too from where I bought it. So Now, Nebius is down a lot more. But again, I don't think that's too controversial. Like, there is no thesis to Nebius or CoreWeave or IREN without NVIDIA. I think people are falling way too in love with the data center names without realizing there's a company that's supplying the thing that goes in all the data centers that the neoclouds have to buy in order for them to have a business. And none of the neoclouds are profitable. Let's be honest about that. All of them will continue to dilute. Let's be honest about that. And NVIDIA is profitable, doesn't need to dilute, and has better margins than all of them. Now, Nebius is not a $4 trillion company, so seeing it go from 24 to 50 billion is not that crazy. And their rate of growth is more than NVIDIA because they're obviously a smaller company. But they're not as safe as NVIDIA. So I just think it's not that scary to rotate there. Why is the LA meetup from 6 to 12 a.m.? Because it is on a Saturday. So the reason the New York meetup was from 2 to 6 is because it was on a Sunday. But it's going to be a Saturday night in LA. So it's going to be a little different. By the way, one of you guys hit me up in LA. I might be going to my first ever, not only Lakers game, but basketball game when I go to LA. One of you guys were very generous to potentially open up some seats for us at the Lakers game on Friday before the meetup. I've never been to an NBA game before. I've never even stepped in an NBA arena, which is crazy because I love the NBA and like I am a fan. So I've never seen LeBron play live, so it'd be pretty cool to see Bronny play live. And Lakers. By the way, I think he's definitely leaving the Lakers this year. No, it's not courtside. It's not courtside. We're not there yet. Maybe one day we'll sit courtside, but I think LeBron's definitely leaving the Lakers. Lakers, first of all, are a mess. I mean, Luka and LeBron cannot play together, but I think he's going back to Cleveland for his last year, and that's going to be the end of his career. But it'll be pretty fun to see them. Also, the fact that it's called Crypto.com Center is so disgusting. Like Staples Center was like, that was LA. Like LA was the Staples Center. Crypto.com Arena is so like, it just sounds horrible to say it. So I wish they never got rid of the Staples Center. But it will be fun till we see the game. Zscaler down 15. That feels stupid. Caterpillar down 1.4. Have you been to a Staples lately? Actually, I went there 3 weeks ago because I had to pick up something. Yeah, it was definitely a ghost town. I agree. I mean, they obviously can't afford to pay the Lakers for naming rights anymore. But, I mean, they had the store open. There's like 7 people when I walked in. It's kind of great, man. Just like, if you need a stapler, you know, you need some notebooks, like you just go to Amazon. You get it in a couple hours. Even this chair, like usually we go to Staples to get like desk chairs. Like, nope, you get it from Amazon. So much easier. Yeah, we had the OpenAI stat. ChatGPT, 900 million weekly users, 50 million paying subscribers. I wonder what's the average price on the 50 million paying subscribers, because they can't all be $20 a month, right? Because I'm sure ChatGPT charges less in other countries. But if it's even close to $10 a month on the average, then 50 million is not bad. Where's Fear and Greed? Fear and Greed 42. Yeah, the market's just flat today. We're not like just like water falling down. So you're not really going to get fear or extreme fear by any sense. You need Nvidia like 175 for that. Now, the data centers probably are seeing extreme fear, but everything else is just flat. Any news on TE? This is another one of those companies. Wow, down 17%. I didn't even see this. It's another one of these names, man. A lot of these energy names got bid up, hyped up on X in January. And what happened? Like, they all collapsed, all of them. This thing was almost $10. These are very small companies. People are trying to find the next bottleneck to AI, which is energy, and they're trying to figure out a way to play it, which is important. But man, these names they were not the solution. EOSE, T1, etc. Bloom's the only one that reasonably has held up, because I think there's some more substance there. But the rest of them have gotten hit. Now, again, look, this is also market sentiment. I mean, I don't think TE or EOSE would be down as much if Nvidia was like pushing 205 or something. But if the big one falls, all of these smaller derivative plays, they have no shot. Which is why, again, if you're bullish, I think you gotta be like, I don't see a world where the S&P's 7,500 and Nvidia is stuck. So if you're bullish on the market, you know, it would beg to differ that at least Nvidia. I don't know about the other big tech companies, but at least Nvidia, given Nvidia is the catalyst for all these other smaller plays, probably is higher. Netflix right there, 93. VG, they've been holding on strong as well. They actually beat $10 last week, now just below that. Who's your favorite team? The Knicks, which I felt had a good chance this year, but it looks like the Pistons have a way better shot to win the East. There's probably a lot of coders on the max plan for ChatGPT. That's a good point. I mean, did you hear what he said? He said Codex grew 37% last week. The entire Codex business grew 37% last week. I mean, that is crazy. Have you guys seen that video where the product managers are like dancing? Oh, how do I describe this? Because an AI version of it just came up on my feed. It looks kind of funny. The caption is, "I saw this on my timeline, so now you have to see it as well." It is so cringe, but it's funny. You guys know the one that I'm talking about? Where like they're dancing and they're like, I don't even know how to describe it. Yeah, the boss in the miniskirt thing. All right, I'm just going to show this. It's a red day, whatever. If I have to see it, you guys have to see it too. Here we go.
Gen Z bustin' a mini. Gen Z bustin' a mini. EDVTs in a bob. EDVTs in a 5'3" and an attitude. 5'3" and a secret product in the trench. Secret product in the trench. New friend green and a sneaky link.
They put carp in there. Oh my God, I didn't know they put carp in there.
New friend green and a sneaky link. Fake 10 hands in a hoop. Fake 10 hands in a hoop.
This is why we're spending $5 trillion on capex, folks. This is why we're spending $5 trillion on capex. The actual video, this was like a real video they posted on TikTok, and the other caption I thought that was hilarious is like, "This is why Squared fired 4,000 people," because it's like, you know, if that's all you're doing during the day, you know, you're probably gonna get fired. That is crazy, dude. They really put Elon, Karp, Bezos, all those guys in it. Well, you know, hopefully that justifies the ROI on capex. Karp was crushing it. He was the best dancing there. Nvidia still red. Okay, maybe we are in a bubble. 5-3 with an attitude is the worst. Yeah, this video went viral like a couple months ago, actually. And every time there's like a major layoff news, people post it and say, "Yep, this is why we need more layoffs." So obviously it went viral again last night because of the Square news. Paramount's up 17. Well, Netflix and Paramount both getting the pump here. All right, is that it, guys? Are we done? Are we done with all of this? I don't think there's any other headlines that could necessarily change momentum today. Trump faces 2,000 tariff lawsuits following Supreme Court loss. Man, Yeah, lawsuits are now starting to stack up. FedEx, Dyson, Dollar General. Wow, big companies are joining the lawsuits. It's not just mom and pop stops. Yeah, I mean, yeah, I would imagine Dollar General, that's probably have to pay so much in tariffs, wants some of that money back. All right, that's what we got, folks. That is what we got for the day. S&P down 0.5%. Nvidia continues to get hit. The data center is getting hit worse. We'll see if things change by the end of the day, but I wouldn't expect them to. This weekend, what are we doing? Sunday, we'll have the show as always. Yeah, I don't think anything too crazy this weekend. Next week, we have a lot of earnings, including Broadcom. All the big ones are done, but we have Broadcom next week. We have Costco next week, Marvell, ASTS, Space Mob, Archer, Target, Best Buy, the retailers. And then the week after that, we have... When is Oracle? Do we already have Oracle earnings? Oh, no, I don't see it on my list, but Oracle, I believe, is the week after that. And then we have Adobe on March 12th. And then, by the way, we start the bank earnings again on April 10th. So in a month, we are right back to earnings cycle for Q1. April 10th, we start bank earnings again. So we have a month break. And even within that month, we have pretty big companies like Oracle, Broadcom, Adobe. And then start of April, we're right back into earnings season. So hopefully by then we've made some more progress, but as of now, we are still stuck in the chop. Did you see the Energy GM ad? Yeah, I actually show that. That one also went viral, and they used an Elon AI. This is and again, this is the worst it's ever going to be. So like, this is, think of this 5 years from now is going to be even crazier.
By 2030, almost 80% of people had lost their jobs.
They had no money, no purpose, but they had a lot of time on their hands.
The less people actually did physical work, the more they wanted to appear as if they did.
What if we could use the energy of humans to power the machines that took away their jobs?
Energem solved our need for energy and your need for purpose.
It's so dystopian, but these are, I guess, the way these advertisements are going to be. I mean, what is Elon going to sue them? Is Bezos, Sam Altman? They're the ones who created the technology for these companies to then manipulate their face and body figure to make the ad, more funny. And so they're just going to have to deal with their likeliness being used and stuff like this. And I guess how it's playing out. It's the Matrix. Yeah. I mean, it absolutely feels like the Matrix. The Matrix did say humans are just going to be a battery for machines. That is correct. I guess we're going to see how it plays out, folks. But if it does play out like that, more broadly, a lot of these data center names, tech names, obviously Nvidia, should probably continue to do well. S&P actually making a high of day right there, right as we're about to leave, 680, 610. I mean, if we can get a full reversal today, that'd be crazy. That's 3 points. I don't know if that happens, but at least it's not stuck potentially hitting below 680. All right, let's do word of the day, and then let's get out of here. We are done for the week. Does anyone else feel exhausted this week? This week has been a long week. A long, long week. We got through Nvidia earnings. But we're done. We're moving on to March. When is spring? Spring starts March 21st? Or April 21st? March 1st. No, March 20th. Okay. So we got about 3 weeks until spring. And we will officially, hopefully, get out of what we've got, of what we've been dealing with in the winter, not only from a stock market perspective, but on the Northeast, obviously, and the Midwest, a weather perspective. Yes, we'll have the market close today. I don't think anything's going to change too much, but we will we'll still have the market close. All right, word of the day is it's got to be pellucid, right? There's no way I get that wrong. Pellucid? I think it's pellucid. There's no way I get that wrong. Exceptionally clear in meaning, style, or expression. Her explanation of the strategy was pellucid. No jargon, just logic. There's no way I get this wrong, bro. Like, if I get this wrong, we've got issues. It's pellucid. Pellucid.
Pellucid.
Why is an E turning into a U? Like, this is honestly the dumbest language on the planet. Why, if they want to put a U in it, put a U in it. Why does a pel turn into a puh? No one in the chat can tell me they knew it was pellucid instead of pellucid. I swear I thought there was no way I'm getting it. It's P-E-L-L. We already said the U. This is not making much sense right here. English makes no sense. I agree. This is why we need Duolingo. It's just that stock can't catch a bid. Exceptionally clear in meaning, style, or expression. Easy to understand. That's what we got for pellucid. As Nebius continues to take a hit, dude. These data centers, my goodness. Nebius down 11. CoreWeave down 19. Iren down 8. Absolute bloodbath across SaaS, fintech, data centers, and banks. Those four getting decimated today. And Nvidia loses 181 again. I mean, we're going to need a real reversal to see any recovery towards the end of the day, but right now, all those still getting hit. Yeah, I think the private credit stuff also might be affecting the debt financing of the data centers, and that's what's also creating pain. Oh, let's look at the stock draft. Let's get ready to see the pain. Obviously, my biggest loser in this thing is Duolingo. Okay, as bad as it is, it's still keeping me in second place. So Matt's down to 25. I'm down to 10. Duolingo, we're down 80 on. We're up 80 on Nebius. Ironically, Nebius was my best pick in this. That's crazy. Steve's down 0.53. Tanner, Trade Desk just really messed him up, along with ServiceNow. Like, my P&L, if I didn't have this one thing, I probably would still be second, but it wouldn't be abysmal because everything else is relatively okay. Yeah, we got some negative 10% moves. That's fine. But the rest are flat, if not up double digits. Matt's fine because he has Rock Lab and ASTS. Tanner has three big ones of down 30% or more: Coinbase, Trade Desk, and ServiceNow. That's what's, and then Melly's almost 30%, but he's making up for it with ASML. And then Nvidia, Nvidia should be closer to 200. That would be helping him out, but he's up 25 on that. Chris is getting hit on Novo, Oracle, Elf, and Axon. And then Steve, unfortunately, just got hit with MicroStrategy and HIMS. I actually offered to trade HIMS for Apple. And if I had HIMS and Duolingo, it would be a mess. But we kept Apple. Apple's up 36%. And that's what we got on the stock draft. Is anyone well, we're all being the S&P. Well, no. Okay. Chris is not being the S&P. Steve's not being the S&P. Me, Tanner, and Matt. Well, actually, no. We would have to calculate the S&P from June of last year. Which, if that's the case, I think only Matt is beating it. Because we started this in June, right? So that's what we got with the stock draft. All right. That's it for me, folks. We'll be back. we'll be back at the close, and we'll keep going from there. Hold on, I'm looking at another report right here. HTGC down 7%. They just got a short report. Hercules Capital, $2.6 billion company. I don't think this is a private credit company, but I mean, this is getting crazy. You're getting short reports come out of nowhere now. You're just seeing a lot of these names get hit randomly. Wow, Nebius continuing to get hit. I mean, I didn't sell yesterday because I thought this would happen. I sold it to buy Nvidia. I didn't know this would happen though. Down 12 right here. Again, I think this is a reaction to CoreWeave. CoreWeave down almost 20% now, so that's kind of got to reverse before we see a change. All right, I'll be back in the close. I think Steve will be live with me as well, and we'll see if we can end out Friday on a little bit better of a note than what we have here. If I don't see you guys on the close, I'll see you on the Sunday Future Show. If not, enjoy your weekend, relax, spend time with some family, get some good food, maybe take a break from thinking about the markets. We all probably need a little bit of a break. And we'll be back on Monday to keep this going as we enter the month of March. It's going to be a busy month, a lot of traveling. But we will keep going from there. Thank you, everybody. Appreciate it. I'll see you guys later on the close. Bye, everybody. Have a good one.